Good morning, everybody. Welcome back to another episode of the Market Open. We're 1 minute late, but we're here. We're live. Thank you, everybody, for being here. We've got a lot to get into and a lot to talk about over the course of this Market Open. We have a bunch of headlines that are buzzing in the pre-market. We also have a lot of macro events that are happening this week, the largest being JPOW will be speaking at the Wyoming Jackson Hole event. And this event is going to be important because right now we are expecting to get a rate cut. And JPOW has done this in the past. You could call it a rug pull. You can call it a disappointment, but he has upset people at Jackson Hole before by not really being essentially as dovish as the street thought he was going to be. And so on Friday, he will be making an announcement. And if that announcement is not, bullish, then it could pose an issue for the market. And quite frankly, I think over the next 4 days, we could see some red to flat behavior in the stock market on this anticipation of the event alone. Because, after this event, you have 2 weeks left until a rate cut. And if the rate cut probabilities go down significantly based on him being hawkish, right now the rate cut probabilities are at 82%. They were at 94% last week. That would not be the best thing in the world. So we got to see how this one ends up playing out. And that will be the most important thing that we're watching out for this weekend. On top of that, we've got earnings this week. Very, very important earnings that we've got going on. We've got all the retailers. We did have Palo Alto this morning. We'll take a look at what they did for their earnings, but we have Home Depot tomorrow. We have Target, Lowe's on Wednesday, and then you got Walmart on Thursday. You do also have some software companies, but these are some of the most important earnings. They will give us a better look into if the tariffs are actually having an impact to the downside when it comes to demand or to the upside when it comes to inflation. So along with JPOW, you've got the retailers with earnings, and I think that will be some of the most important stuff we look out for this week as we get into this market open. And so that's kind of what I'm looking for this week. We also have the Miami meetup this week. So if you're going to be in Miami on Saturday, I will see you guys there. Very excited to meet everyone in Miami. But that is how it seems like we're going to be ending out the month of August. And then comes September. Last 4 months of the year, 2026 on the way. Kind of crazy, but it is what it is. And it looks like that's how we're going to be ending out Q3 going towards the latter half of the year. Thank you, everybody, for being here. Good morning. Good morning. Jasmine, Brandon, Trey, Timothy, what's up? What's up? Missy, Brent. Thank you all for being here. Arnon, what's up? Currently not right now on time. Appreciate you still being here, even if I was a minute late. Dude, that last minute to make it at 8:45, there's so much stuff that happens with the camera and the lights and this and that. It's like, I feel like I should set the stream for 8:47, but then I would end up coming in at 8:48, which is the problem. But it's always that last minute where you get a little late. I'm Beneficial. What's up? Ellie, what's up? Josephine, what's up? Thank you all for being here. Hopefully everyone had a great weekend. I got to go to the apartment over this weekend and finish up moving some stuff. First stream, September 1st, we'll be at the apartment. Very excited for that. I also got this case over the weekend, which I'm honestly in love with. Like, look at this case, dude. Look at my battery, bro. This is ridiculous. 5%. This is so stupid. Every day, somehow it just gets that low. But I love this case. So I dropped my phone yesterday in the middle of a Walmart an hour after I got the case. So I think I can't trust myself with a naked iPhone anymore. So yeah, so I did over the weekend. I got a case, did some updates to the apartment, and that's pretty much it. And we are ready to get back into this market. For real, what's up? Bonksy, what's up? Georgie, what's up? Andy, Matt, thank you all for being here. RG Trade, Stuart, Demir, Mark. All right, cool. Let's get into it. We got a lot of stuff to talk about, a lot of stuff to get into, and we'll keep going from there. Now, if you were on the future stream last night with Steve, we actually talked about a bunch of different topics, looked at a bunch of different charts. The sort of main discussion Steve and I had actually was around Ethereum, which I guess we can get started with because Ethereum is low in the pre-markets, or at least it's down in the pre-markets, up a little bit from where it was last night. But Steve's getting bullish on BMNR, and he will be coming out with an article soon. Some people can say that's toppy because Steve's becoming a crypto bro. Maybe other people can say Tom Lee's a really good person to convince those that have doubted Ethereum. But Steve's in it. So Ethereum right here, 43.34. He has not bought it yet. I think he'll buy it today or tomorrow. I don't know how much he's going to buy. You guys know Steve. He'll get bullish about something and then he might not buy that much of it. But Ethereum right here, 43.35, and Bitcoin itself is below 116. Now, yesterday there were basically just a ton of liquidations that seem to have happened in the crypto space. This to me was more algorithmically driven. You had about $100 million that was liquidated, and Solana, Link, Bitcoin, Ethereum, Doge, Avalanche, all these major coins took a bit of a hit. And as a result, you had some weakness in the overall crypto markets. I wouldn't read that much into it. I don't think it's that big of a deal. I think, look, Ethereum and Bitcoin have been on an amazing run. Bitcoin hit all-time highs last week. Ethereum was less than, I think, $50 away from hitting all-time highs. So at that point, some of that momentum being given back through people taking profits or through algorithms coming in, that's fine. All you're doing is giving Tom Lee cheaper Ethereum, in my opinion. This guy wants to buy 24 billion of it, and if they're selling it off into the low 4,000s, he will be the buyer. Speaking of Tom Lee, here's the press release. BitMine is now the #1 ETH treasury in the world and the second largest crypto treasury globally, and the 10th most liquid US stock, trading 6.4 billion per day on average. They bought another 300,000 ETH. They have 1.52 million ETH tokens. Their 6.6 billion net asset value is a 1.7 billion increase from the 4.9 billion last week. So their market cap is just under 10 billion. So that MNAV, it's going to open up at around 1.5. So they're paying 1.5 times the Ethereum on Tom Lee's balance sheet to access their treasury. And as of today, they are now the #2 global treasury behind MicroStrategy, which, by the way, MicroStrategy bought more Bitcoin this morning as well. I think he bought 400 more Bitcoin. And MSTR now has, in total, they bought 430 Bitcoin, 629,376 Bitcoin at 73,000 a coin. So look, these treasuries, either they're going to be the sign of the top in a frothy market where we were, banks were loaning out money at 0% for people to buy as much crypto as possible, or people were willing to deal with the dilution of a MicroStrategy or a BitMine in order to be okay with their accumulation of these asset classes. Or this is one of the smartest things ever. And although Ethereum's not going to the moon yet, and maybe Bitcoin's not going to 200,000 yet, eventually when they do, these will be levered plays that will do very well. I'm more on the side of the latter versus the former, simply because I just think there's so many regulatory elements to the crypto industry, like the Genius Act, that have opened up the possibility for, in particular, Ethereum to be valuable when it comes to stablecoins and tokenization. And obviously, I think if the government keeps printing money, then Bitcoin will sustain its value, because it is what is being seen to me as the hedge against infinite money printing. And I think those two macro tailwinds, along with the institutionalization of crypto, Ethereum had over 2 billion of net inflows last week. First time they ever did that in a week. I don't think that's stopping anytime soon. So from that perspective, relatively bullish that this stuff is going to play out. Question is just when and if you're able to deal with the dilution in the process. But those assets seem to be doing all right. And that's what we got. ETHZilla acquired 94,000 ETH at an average price of 3,900. Okay, so that likely was before they launched their treasury. Peter Thiel is one of the investors in those. ATANTF, I believe, is that ticker, or ATNF. It's 180 Life Sciences. Oh, they changed it to ETHZ. They changed the ticker. Wow, they changed the entire ticker to ETHZilla Corp. Okay, there you go. That's down 7% in the pre-markets. So you also have someone like Peter Thiel saying, hey, I'm going very long Ethereum with these leveraged treasuries. And as a result, you're seeing that momentum across the entire Ethereum landscape. Bitcoin right here, 115,335. That is slightly down in the pre-markets as well. Now, SBET, SBET's interesting because SBET is down another 2% today. It is now below its NAV. I think it's like 0.9 to 1, 0.95 to 1. So you're paying less than what the Ethereum on the balance sheet is worth for SharpLink. You're paying 1.5x more what it's worth for BitMine. I don't know which one's the better buy. And, people might say, oh, well, SBET's a better buy, obviously, because it's way less. Yeah, but SBET doesn't have Tom Lee, and that does require a premium. So I don't know. I mean, financially, it feels like SBET, you're getting a better bargain. But are you getting a better bargain if you don't have someone who can actually advocate for this stock as much as Tom Lee's advocating for BitMine? I don't know. But yeah, SBET, I don't know exactly why the market is not giving it a premium at all. I guess the earnings weren't that good on Friday. But they do have about 728,000 ETH, which is just 50% under the 1.5 million that BitMine has. So on BMNR, you get Tom Lee talking about it on CNBC every day. Yeah, and it's Tom Lee's brand is hard to replicate. And if you believe Ethereum is going to go up in the future and it's going to win, the question then simply becomes, who is one of the main beneficiaries of leveraging against it winning. And Michael Saylor has been one of the main ones for Bitcoin that has since 10x since he bought it. And he's been able to preach the thesis. There's a lot of Bitcoin treasuries. Not all of them get the MNAV that MicroStrategy does. And so from that perspective, I like BMNR more, but SBET does feel like it's cheaper and potentially might be able to outperform in the short term. Now, the way this all messes up is if Ethereum just doesn't do its thing. And I don't think the price action of the weekend is a reason to get bearish on Ethereum. It's had a monster run from basically 2,200, and now it's at 4,300. And, they're going to keep it a little bit below that all-time high for a bit until it breaks through. We are heading into a little bit more of a seasonally weak time in terms of not just the historical apparatus for what could be seasonally weak, but the anticipation of if we're going to get that rate cut or not. Because if we don't, I don't think Bitcoin and Ethereum are going to have fun. I think we got to get that rate cut. I think they will be fine long term. But like, if we don't get that rate cut in September, the whole market, I think, is going to be very surprised. Risk on assets are probably going to sell off a bit. And that would not be the best for Bitcoin and Ethereum. And so that rate cut decision is only a couple weeks away. So do we go flat in a couple weeks? Yeah, I don't think that's crazy to imagine. Same thing with Hoodie, Palantir, Reddit, all these risk on assets. Could they kind of just stay a little flat? SoFi really needs those rate cuts for refinancing demand. We need an answer to that. And on Friday, if we get a super dovish Powell, I think these things get front run before the rate cut. If we get a confused Powell, at least to the market, then we're going to have to see. And so that might just end up taking some time before it plays out. So that's what we got. Yes, Tanner does hold some SBET. I think Tanner bought it because someone gave him a donation to buy it in his super chat fund. So, but also in general, he's like, I think we were talking about it on Tech Bros on Monday last week. He's bullish. He likes Ethereum. He thinks the treasuries are one way to get exposure. So I don't think it's crazy to want to get exposure in some way. The question is just which way. And everyone kind of needs to figure out which one is best for their own risk tolerance and how they would navigate Ethereum as an asset class itself. So that's what we got in the context of Ethereum. And again, it does look like Mr. Tom Lee is loading up even more on Ethereum. Now, we got a bunch of macro things that we've got going on this week that we will discuss. First of all, Palo Alto, I did not even look at their earnings. So let me pull it up right now and see if they beat or if they missed. So I'm looking at it in real time with everybody else. Did the earnings even come out? It's 9 o'clock. I would imagine the earnings have come out. Is the stock making a move? Let's see. If not, then maybe this one's more of a delayed earnings. Palo Alto. Okay, I guess it comes out later. Usually early morning would be 7:30-ish is when it comes out. Is post-market? Oh, why does it? Okay, my earnings calendar said it was. Yeah, I thought it was weird. I was like, why is it? Yeah, you're right. It is post-market. Okay. All right. So Palo Alto will look for after Bell. This is a very important cybersecurity company. And speaking of cybersecurity, it is part of Dan Ives' new Ives 30. So these are Dan Ives' best ways to play AI. A lot of these names you might recognize, like a Palantir, like an NVIDIA, Meta, Apple, Tesla. There's 4 new names he added. Number 1, GE Veranova. Number 2, Roblox. Number 3, Nebius. Didn't expect to see that one there. And then number 4, if I'm not wrong, I believe it is INOD. Innodata. I will confirm with that. But those are the new 4. Roblox is one of the main ones, along with Nebius. Now, Nebius one got everyone excited yesterday because Nebius is going on a tear. And as a result of people getting excited about Nebius, now Dan Ives is going to be on CNBC talking about Nebius because it's in his Ives AI 30. So I think that's also going to be exciting to see. This one, even with CoreWeave, and by the way, the reason CoreWeave tanked is because the insider, the CEO, sold 3 million shares. And so the 3 million shares that were sold off on Friday after the post-IPO lockup were the reason why CoreWeave took a hit. Nebius did pretty well. I mean, CoreWeave went from 150 to 103. Now it's starting to recover. Nebius kind of stayed stuck at 70. I think it went down from 75 to 70, which is not too bad. So you got Nebius that a lot of people are more excited about. This is a stock I own in my stock draft portfolio. And it's not doing too bad. NVIDIA right here, 180. Tesla, 328. Tesla's actually down a little bit in the pre-markets. Palantir, 174. Hoodie, 112. AMD, 175. SoFi, 2360. Googs at 204. Grab at 513. Reddit, 244. And then Amazon at 230 in the pre-markets as well. HIMS got downgraded today to like $38 from 45. Hims is down 2.3%. Hims has just had a bunch of bad headlines over the past couple of weeks, but the downgrade was from one of the big banks. And I'll try to pull it up in a second. They essentially said, hey, we really don't like their GLP-1 story. And yeah, Truist took them down to 37 from 48. And they said 2026 revenue growth, we think, is going to be a bit weaker than expected. Now, Hims seems like, I mean, if it keeps dropping, it's going to be below $10 billion market cap pretty damn soon, which is kind of crazy given their growth. It's at 10.4 billion right now. I think when it opens at 44.85, it'll be just below 10 or just at 10. I don't know. Does it deserve to be that low? I don't think so. But then again, they have their own set of headwinds that they have to deal with. So this stock right here, down another 2% in the pre-markets. Where is Novo? Novo right here. This one is up a little bit, 4.9%. And then Lilly, this one is also slightly flat. They did have a Lilly insider, the CEO, buy $1 million worth of stock last week as well. So you had a bit more of insider buying on Lilly. Okay, cool. So that's some of the headlines we've got right there on different companies we're looking at this week in terms of earnings. Now, again, the most important thing this week is going to be Jay Powell along with the retailers presenting earnings. But regardless of Jay Powell, regardless of the retailers and earnings, and regardless of pretty much anything else, take a look at this right here as we shift into some more macro. People are buying ETFs and single stocks in the United States at a record amount. I shared this stat last night on the Future Show, but this thing is just insane. It is absolutely incredible. $5.9 billion of stock was bought last week from all investors in the United States for US ETFs and single stocks inside of the United States. This was above the 52-week average of 2.3 billion. It was almost double the 52-week average of 2.3 billion. This lifted the 4-week average of 2.8 billion, and institutional investors were 3.7 billion of the 5.9 billion. This was the 10th largest weekly amount in 17 years. 10th largest weekly amount in 17 years. It's kind of crazy when you think about it. But in the past 17 years, the most amount of stock in if you combine US ETFs and US single stocks that were bought in a single week was last week by institutional investors, 3.7 billion. Corporations bought 1.6 billion in buybacks. Retail bought 400 million worth of stock. Hedge funds bought 200 million worth of stock. And individual investors have now bought 33 of the last 35 weeks. 33 of the last 35 weeks in retail investors have decided to continue to buy. Just seems like we have momentum. Just seems like we have a lot of momentum in regards to the buying activity. Maybe that slows down this week. Let's actually do a poll in the chat and see what people are expecting. Red week or green week. We do have a pre-market that's slightly red in certain areas. So curious to see what people think. But in general, you've got momentum. And that momentum is not seeming to stop for any reason, much less for anything like PPI. I mean, the fact that we had PPI last week, and it was horrendous. Like, I can't even sugarcoat it. It was a bad PPI, even though there's ways to like say it's not that important, yada, yada. But if you assume the PPI is as relevant as it is, and it came in at the level that, at a level that we haven't seen in over 3.5 years since 2022, and the market was like, kind of don't care. I think that's pretty bullish. I think that's pretty bullish. And that's also why I think this market continues to be resilient. Okay, so the reason Novo's up right here, Novo launches cash pay Ozempic at $4.99 a month, which is half their listing price. That's why that stock is up 4%. That's also probably why now it makes sense why Hims is down. Novo, along with their downgrade that Hims got, Novo right here up 5%. All right, so they're offering Ozempic at $4.99 a month on a subscription, half the listing price that they've historically had. I mean, yeah, this is likely bullish, along with the fact that Eli Lilly came out, a couple months ago and said they're working on the oral version of Ozempic, and that's they caught a bid off that news alone. So you would imagine that people are excited when you get news that can further enhance the ability, either on a cost perspective or a quality perspective, for people to get Ozempic. So Novo launches cash pay Ozempic at $4.99 a month for uninsured type 2 diabetes patients, roughly half the list price. The program covers all FDA-approved strengths and availables through the Novo Care Pharmacy home delivery, Ozempic.com, in partnership with GoodRx at 70,000 pharmacies. The $499 pricing extends to Wegovy for eligible self-paying obesity patients. Company aims to improve access to authentic semaglutide and prevent patients from seeking unapproved alternatives, launching August 18th. There's already an oral version. It's called dieting. That is also true. There you go. All right. It makes sense why Hims is down on this and Novo's up. Now, Novo's still, this is one of the largest pharmaceutical companies in the world. It has had a just disgusting year. This thing is down 40% this year. We talk about UNH, which I know is a really big company, but Novo not had a pretty year. So this might be something to get the street a bit more excited. I probably said semaglutide wrong. I don't care. It's a complicated word. Semaglutide, whatever it is. But you guys know what I meant. You guys know what I meant. So that is what we have on Novo. Lilly right here. Is that affected by it? Lilly's up a little bit as well. 701.50. So there we go. Is glutide? Okay, well, why didn't it look like glutide? Semaglutide. See, that's easier to say. Why does it look like semaglutide? Or semaglutide? Tide like the detergent. I bought detergent over the weekend, so now that makes more sense. Okay, so that's what we got in the context of Eli Lilly, Hims, and Novo. So again, going back to that chart, it just feels like there's a lot of buying from retail and institutional investors, and it looks like that's not slowing down. Now, here's another chart over the weekend that I think is really important. The investor survey from AAII, which is the American Association for Individual Investors. This one showed some very important trends. 46% of investors are bearish. As per last week, they do the survey every single week, and only 29.9% of investors are bullish. The 46% that are bearish are the most that have been bearish in the past 4 weeks. The 29.9% that are bullish are the least amount of people that have been bullish in the past 4 weeks. Now, why does this matter? Simply put, we need a wall of worry. We need not everyone to be euphoric, everyone to be excited, everyone to be piling in, because then the stock market has no more room to go higher because you have all the money that could possibly come in, probably coming in, and then you get some level of euphoria with prices that are fundamentally detached from reality. You need someone to be bearish on the other side to create that alpha. And that wall of worry, which then creates the foundation for new money to come into the market once those people recognize they were wrong or once those people stop being bearish, it seems like we're in a decent sweet spot as per last week's survey, where you have the most amount of people that have been bearish in the past couple of weeks being bearish and the least amount of people being bullish, which likely also reflects the numbers we got on Thursday that I forgot to show because I wasn't live. But we had $33 billion added to money market funds, and the S&P 500 hit all-time highs last week. That's pretty incredible, dude. S&P is hitting all-time highs, and $33 billion is still making its way out of other asset classes and joining money market funds to be on the sidelines. Now you have $7.19 trillion on the side. It's hard to imagine that money doesn't come out if we get the rate cut, or at least some of that money, obviously not all of it. And now it's a question of, do we get those rate cuts? But the fact that people were scared enough to push away $33 billion, to me, is bullish, because it means that you do have more people that are scared than not, and you kind of need those people to be scared at the end of the day. And so we're going to see on Friday what J-Pow says, and if that can continue to help the bull case on people being more bearish, which would eventually create that wall of worry. Now, in terms of J-Pow on Friday, let's hear from the professor real quick and get some of his perspectives. This one's going to be a big meeting. Here's what he thinks J-Pow will say and what we should be expecting based on the revisions from those non-farm payrolls.
The stop of the illegal immigration, most economists say that has cut the rate of job growth, from maybe 250,000 down to 100,000. And maybe it's at a slower rate right now than it would. You would expect that to happen. So the first half GDP, was really just a little over 1%. We did have a better second quarter than a first quarter. I think we're going to have some slowdown. This is a consumption tax. This is a tariff tax. It is bringing in revenue. It did allow the big, beautiful bill to lower some other taxes. So there is some stimulus on that other side. We could get some trade off of the deals that are made. Now, as you know, I'm not a tariff fan. I think that if we were going to do a consumption tax, which I'm in favor of, we should have done it much more across the board than we do just on foreign imports. Nonetheless, there is that other side, and very few economists are predicting a recession. A one-time slowdown, a bit of that slowdown, a little bump, but right now, just with this, going down to 100,000 or 50,000, or GDP temporarily 1.5% does call for lower rates. Listen, the short-term rate should be 100 basis points below the 10-year rate. And right now we're at 4.3, 4.25 on the 10-year. And that means we should be moving to the low threes on Fed funds. And that's really going to help Main Street. It's going to help those small firms. We see the Russell 2000 so responsive now to whether there's going to be a cut or not, because it's exactly those small firms that are borrowing short, not the Mag 7, not the big firms. So
as you can see, the professor kind of in tune with the mainstream consensus, which is that, hey, it's time to get a rate cut, and that would help Main Street as well. Now, take a look at this. Speaking of small caps, this stat I thought was incredible this morning. Nvidia's worth 4.4 trillion, Microsoft's 3.9, Apple's at 3.4. Every stock in the Russell 2000, IWM, 3 trillion. So you have three companies that are worth as much as the entire IWM. And that is the argument for why, well, that is one of the arguments, at least for small caps, why we need to have a rate cut, because those are the companies that are borrowing more money. Now, those are the companies also that are not as holistic as an Nvidia, Microsoft, or Apple. Obviously, they don't have the balance sheets of those companies, but you would imagine the Russell gets a little bit of a run if we get that rate cut, and that would help, I think, the S&P 500, because that would broaden out this rally, or that would at least broaden out the ability for the rally to expand if it wasn't just isolated in the large caps. And I think that's important for all of us to see. Speaking of small caps, Stan Druckenmiller is going long small caps. Legendary investor, averaged 30% over the past 30 years in terms of his returns. He sold out of Tesla, Capital One, American Airlines, and Amazon. Sold those completely. He added to AppLovin, Roku, TSM, Delta, and United. And then he started new positions in Warner Brothers, Broadcom, Bank of America, Microsoft, Nubank, C Limited, and calls on IWM. So it looks like Mr. Druckenmiller is also expecting rate cuts and allowing that to be a tailwind for the broader S&P 500 and small caps as well. What if rate cuts are a sell the news? It could happen. I mean, it kind of did happen last year where we had a bit of a sell the news on rate cuts. It was a very small sell the news. And then we ended up seeing a lot more momentum. We actually had to sell the news on really good CPI. I remember CPI came in at like 2.4 in September last year, and we had to sell the news, but that one recovered as well. Is the market priced for a rate cut? Yes. Is the market expecting at least 2 or 3 rate cuts? Yes. So could the market sell off if we just get what we're expecting? Sure, that could happen. The question is, which becomes the question that I think everyone has been fascinated by, when does the market let this dip become a real dip? Because since April, we have not had I don't think we've had a single 2% S&P 500 day. The closest we got to it was August. We had 1.62% down on August 1st. Now we're back up about 3.2% since then. But we have not had an ugly day or a meaningful ugly drawdown across the market, even with the Iran-Israel stuff, even with Moody's and the bond auctions, even with Trump threatening 50% tariffs on Europe, which we'll talk about Trump and Europe in a second, even with Trump threatening 35% tariffs against South Korea and Japan. Like, we just haven't had those ugly days. And to me, that's a signal that's hard to ignore. To me, that means that people are ready to buy the dip, people being institutional investors and retail investors at every level. And if the level is 1% down on the S&P and people start buying, then that's something that I think we all have to embrace, at least from understanding that the most egregious of dips are not coming that yet. Maybe that's why we should be worried. Yeah, maybe. But at what point are you going to continue to be worried about that versus acknowledging what's happening, right? Because again, it's not this is something I think it's very important to understand. Every dip that's being bought is not retail. The dips that were being bought from retail, if you want to say, oh, retail's dumb money, they're just throwing their money at this, and the retail's the reason the market's being held up. Okay, you could say that in March and April when there were $40 billion per month that retail was buying. Now it's like $22 billion. And that was an $80 billion dip that retail bought, and retail made a lot of money off buying that dip. Sure. But that was like the right time to buy the dip. Now, I just showed you guys the stat last week. Retail bought $400 million worth of stock. Hedge funds bought $200 million. Institutional investors bought $3.7 billion out of the $5.9 billion. And last week was the week where you had a little bit of a dip, if you want to even call what we experienced last week as a dip. So should we be somewhat worried that every dip is getting bought? Yes. Like, I don't think you should just say, oh, everything's perfect. But should we also recognize the amount of money that's on the sidelines and the amount of FOMO that some institutional investors are having for missing NVIDIA at 90, 110, 130, 150, and now at 180? NVIDIA is not super expensive. If you believe in their growth estimates, they're trading at 35 times. That is not crazy. And you have some investors saying, all right, screw it. It's time for me to buy in. Like, that is really what I think is kind of happening here. Fear and greed is at 64. We're at greed. We did get to extreme greed, and then we had a bit of a pullback. We got to neutral last week, and then we had a bit of momentum, and now we're at greed. So if we stay flat this week, I don't think that would be the craziest thing in the world either. But my point is, retail's not holding up this market. Retail is helping this market, but retail is not the reason for why every dip is getting bought. I mean, a lot of retail, again, this whole narrative that retail's done money is just stupid. A lot of retail have strategically taken profits. And the thing is, when you buy Hood at 29 in April, and you now Hood's at 115, the chances of Hood getting to 29 again, which we'll talk about Hood in a second, because I do have some news on this that I don't think anyone's heard of yet. I found out this morning. So we'll talk about it in a second. I think it's low for Hood to get back to 29, right? So even if retail could sell some covered calls on your Hood position and milk the premiums, then maybe your shares get called away and you make a 3X. Like, I think retail has been very strategic with how they've been managing their portfolios this year. And it came because they got the greatest entry, one could argue, of all time in a bull market with that Liberation Day 10% drawdown or 20% drawdown on the S&P. It is unequivocal that the stats show retail was the demographic that was buying. So now retail has all the leverage. Do you want to sell Hood from your $30 average? Sure, go ahead. Made a profit. Do you want to sell covered calls? Sure. Do you want to diamond hand it? Because, even if Robinhood has a 30, 40% drawdown, you're still up double. Sure. Like, there's so many different ways for retail to navigate this that the big guys just can't, because they did not get that absolute bottom that retail ended up taking advantage of. So yes, I do think there is a little bit of fear that people should have that every dip is getting bought up. But I also think the dips that are getting bought up are not just because of dumb money, or at least it doesn't feel like to me it's because of dumb money just piling in money on any dip like it was in 2021. Especially because you've got the earnings growth to justify why, if people are throwing money at any dip, it's because you're finally getting a discount, even if it's a small discount on an asset that really is, the asset being the broader market, showing the earnings potential that doesn't look like it's slowing down anytime soon. Google right here, 204, Grab 515, Reddit 244, Amazon, you got 230 in the pre-markets. MicroStrategy, that's at 361. MicroStrategy down another 1.3% even after buying 450 Bitcoin. And then Nubank right here at 1304. That one is slightly red. Okay, Hood news. So you guys are not going to expect this. I don't think anyone heard of this. I got a message from someone who lives in Egypt this morning. So if you're watching, shout out to you. And this is why I'm saying this is a community effort when all of us go long on a name together, because as a community effort, we are able to get this due diligence. You guys ready for this? Here we go. Robinhood has applied for a license to do business in Dubai. Hood is embarking on the next stage of its international expansion plan, establishing infrastructure and hiring for the opening of an operation in Dubai in the coming months. Now, how do we know this is the case? Robinhood has applied for a DFSS, which is like the Dubai financial license that they need to get. This is the same thing they did in Lithuania. And this is also, this website has a lot of stuff on it. Let me get something a little bit clearer for you guys. The license in particular is supposed to go live by the end of the year. And as a result of that license, they're able to get the ability to then do business in Dubai. So what it's exactly called is a DFSA, Dubai Financial Services Authority license, in order for them to do financial services and brokerages and brokerage services in Dubai. Now, one of the other reasons we know that this is happening is because Robinhood appointed Mario Camara, which let me pull him up right here on LinkedIn, as one of their heads in Dubai or in Robinhood's Middle Eastern business, to begin working on this as well. let's pull up his LinkedIn right here. Yeah, as you can see, his LinkedIn is updated now with Robinhood in the bio. So he's been working across the Middle East for the past 2 decades in financial regulations, corporate governance, etc. And so August 2025, this month, he is a senior executive officer at Robinhood MENA, Middle East. And it looks like he's going to be one of the main people leading their charge to get that license in Dubai and begin working. Yes, Robinhood's going to start printing oil money. Exactly. Look, so this is exciting to me. The reason this is exciting is because not only, and no one's talked about this yet, because I think this news just hasn't come out. So it looks like Robinhood is going to formally announce it maybe at the Hood Summit or maybe in the future. But you've got a active trader event in September that's coming up. You have the banking launch that's coming up. You have Singapore launch with their regional headquarters in Asia launching at the end of the year. And now, I don't know if Dubai is launching at the end of the year, but if they hired senior executives, they filed for the Dubai financial services license, and it looks like they're ready to start applying to become a hub inside of Dubai, which is already a major fintech hub in the Middle East in and of itself, which gives global firms the access to regional markets, and that license lets Robinhood provide professional clients, and it puts it up against established brokers in Dubai. You put all that together, it seems like there's a world where the international expansion heads to the Middle East and to Asia, which I think are 2 of the best places to start going to. Singapore, major financial services area, and then obviously Dubai, major for financial services as well. So I think it's going to be exciting. And on top of that, you have Hood Month, which starts tomorrow. So Hood Month, if you go to your Robinhood app, at the top right, there is something called Hood Month, and they're revealing mystery drops, 3 of them over the next 2 weeks. The first one gets revealed tomorrow, the second one in 8 days, the third one in 15 days, and all of that I think should be exciting for Robinhood as well. Dude, I think the stock goes higher. I think the stock goes higher end of year. I think it has normalized the 100 really well. I know it's only at 112, but the level that's staying above 100 for the past month has been pretty incredible. The only time it dipped was when the S&P 500 fell 1% on that August 1st Friday, fell to 93, and then it recovered to 107 or I think 105 by the end of the day. So it's like you had below 100 literally for like 30 minutes, less than 30 minutes. We were live when we were seeing it happen. And I think it wants to stay at 100. And I think the market knows what's going to happen with it. So I think Robinhood is going to have a good end of the year. We're going to see how it plays out. But if crypto and Ethereum, Bitcoin, et cetera, they take a little bit of a beating over the next couple of weeks, then obviously that's not the best for Hood. So we're just going to have to see how that one plays out. But I don't think that's the worst in the world. Oh, boy. Did Big Bear AI actually do that? Oh, boy. Let's see if the stock's getting affected by that. Is the stock getting hit? The stock is down 3%, not as bad. Shelf offering up 65 million shares. Really? That's a lot of freaking shares. 65 million of them. Yeah, you're right. 65 million dilution from Big Bear AI. Okay, so what? That's 65. That's basically 300 million, right? You take 65 million times the share price, get around 400 million. So the market cap is 2 billion. Let's do 65 million times 650. Let's say that's when they were to do it. That's 422 million. The market cap is 2.2. So 422 divided by 2. That is basically 20% of their market cap they've diluted by. Or, well, they haven't diluted by. They have filed for the ability to dilute. So there you go. If you're in Big Bear, you just got to remember they now have filed for a self-offering of 65 million shares, which means they can dump those 65 million shares whenever they want. And, you know, to be honest, the stock was $2 at one point. Now it's $6. So it hasn't done well. So for them to raise money is not crazy. It's just their negative growth estimates for fiscal year 2025 is what took the stock down over the past week. But it has kind of recovered. It was at $4.70. Now it's, you know, I know it's not $8 anymore, but at least at $6, it's not in the low fours. So you do have some of that momentum with people buying the dip. AMD right here, 176, SoFi 2365, Google 204, Hood 112.55, and Palantir 174.49 right now. Do you believe Grab has said goodbye to the $4 range for good? I don't think yet, because the fact that this thing fell to $4.79 after those earnings and almost after being at $6 right before those earnings, to me, gave me a little bit of lack of trust in terms of this range at 5. I think this one's being manipulated right now by the short sellers and the market makers. And to me, I don't really care, because Based on, again, what we looked at last week with Grab's institutional holdings, it went from 81% to 83.29, now 83.46. You're getting 3.2 billion shares that are going long from the toots, and that added 2% quarter over quarter. So, I mean, to me, it's kind of irrelevant what the price is. The price needs a breakout moment. That breakout moment is either what they do with their cash, if they have an acquisition, if they have an earnings that really raises guidance, yada, yada. There's got to be some type of moment that breaks it out. And then I think the shorts will cover. Until then, it's probably dead money. It's just being the honest truth. But that's okay for me because I'd rather acquire more shares when everyone hates it before it breaks out. But I do think towards the end of the year, when they put up a 30% growth quarter, you're going to start to see some more momentum. And I don't think it should go down below 5. If it does, I go heavier on my buys because I just think that's really stupid and cheap for a company of this magnitude with this much cash on the balance sheet. But we're going to have to see. If September sucks, if the S&P falls back to 630, Grab's going to be at 450. I mean, like if we get a nasty drawdown on the S&P, everything's taking a hit. And so that's why it's hard for me to say that it's escaped the $4 range right now. But we're going to have to give it another couple months to see how this plays out. Thoughts on Intel after the news that the government buy in? I think that's actually really bullish if the government buys in for Intel in particular, because that means they're kind of guaranteeing Intel won't fail. And so would I trade it based on that? Not really, because again, it's a rumor. Even the White House came out last week and said we can't confirm this. So like if it does happen, I think it's good for Intel. We obviously do need to make more chips in the United States. Would I buy it betting on that to happen and then the stock doubling? I don't think someone's crazy to go long on it from that thesis. I just wouldn't. Like I'd rather just buy more NVIDIA, even with them having to give up 15% of their sales to the United States from China. So from that perspective, I think that one still wouldn't be the worst buy right here. All right, we got 2 minutes until this market opens. We got a bunch of other headlines that we will talk about. Goldman Sachs came out and they said they expect the Fed to cut 3 rates this time this year again, citing weakening U.S. job growth. So Goldman Sachs continues to be bullish on rate cuts. KeyBank upgraded Duolingo to overweight. They set their price target at 460. The gist of their upgrade was, hey, people are way too bearish on something that's growing 40%. And AI is not going to hurt their business. So we continue to be excited about Duolingo. So that one is green. Morgan Stanley came out with a report this morning. They said AI could add $920 billion in annual gains to the S&P 500, which is kind of cool to imagine. They estimate AI could deliver almost $1 trillion in yearly net benefits with long-term value creation of 13 to 16 trillion, 25% of the market cap. Gains would come from cost cutting and productivity, with the biggest boost in retail, real estate, transport, and healthcare. Tech and hardware and semis would see smaller effects, while full adoption will take years. Morgan Stanley calls the AI investment outlook fundamentally bullish, which is, again, the argument for why we are in a secular bull market that is led by AI. Every dip is being bought because of AI. People that don't have exposure want to get exposure to AI. And if you think AI is not dying anytime soon, and the momentum around AI continues to show earnings growth, again, the market expected 2% growth last quarter. We came in at 10.1%. So we beat expectations by an order of magnitude. It seems like more money will find its way to be allocated into the largest AI plays that exist. So that is what we got. All right, folks, here we go. Monday, August 18th. Thank you all for being here with me. Once again, another stock market open. It is Monday, August 18th, 9:30 a.m. The stock market is now once again open. All right, wake your ass up. Let's get into it. NVIDIA opens up at 180.75. That is slightly green, up 0.5%. Bitmine, they bought another 300,000 Ethereum over the weekend. They are down 3.3%. Bitmine right there, 55.88. That's down 3%. Duolingo up 5.3%, 344. That's green. Hoodie down 2%, 111.92. That one is taking a little bit of a hit. You got your red candle right there. Apple 232. That's green. Meta. Why is Meta down today? Why is Meta down? Meta was pushing 800 last week. Meta right here, 771. So that one is down 2%. Maybe there's some news on Meta we'll take a look at. Applied Materials, that's up a little bit from the weakness of last week. Lennar, Buffett is now long Lennar. That one's flat, but he's going long. The home builders, NVIDIA, 181. That spikes up. Bitcoin's up a little bit. Novo, based on their new pricing for Ozempic, that's up 5.5%. Palantir slightly down a little bit. Circle, that's down 1/3%. They did dilute last week by about 8 million shares. So that's why Circle's probably taking a little bit of a hit. Opendoor. They don't have a new CEO yet, but they probably will pick one in the next week. That one's up 8%. Opendoor is green. Webull, Chase Coleman, who is a hedge fund manager I really respect at Tiger Global, he bought 11 million shares of Webull at about $12, 1673. So Webull is green. That's up 4.2%. SharpLink Gaming, SBET, continues to go down. It is now definitively below its MNAV, if I'm not wrong, or very close to its MNAV, 3.25% down again on the day. I don't know why. Well, I guess that's down because Ethereum's down, but that one continues to get hit a little bit. Celsius right here, that's up 5%. Celsius is green. Adobe's down. Bumble's down. ETHZilla's down. IBKR is down. Oklo's down. IGV's down. Coinbase is down. The Qs are down. You're seeing a lot of red across the board, even if it's not aggressive red, even if it's like 0.2, 0.3%, but you are seeing red. Hoodie trying to get back to 113. That's still down 1% on the day, but that's up. APLD, that is also up right there. 1575, that's up 11%. Looks like there might be some news on that. Tesla is 332. That is green. Solar. Okay, so we talked about this last week. First Solar was actually named as the top choice of UBS. And I didn't read the entire report, but UBS this morning, they did this like really big report on going deep into the big, beautiful bill. And they basically said, hey, everyone was super bearish because of the subsidies, but there's other parts that were actually good for solar. And that's why Enphase is up, First Solar is up, SolarEdge are up. And so it looks like Trump didn't absolutely nuke the solar plays. I mean, he did to an extent, but there's some bright spots there. And that's why all of those are going green. Bitmine down 4%. Duolingo up 5.3. Tessie 333. Tessie's going green. And NVIDIA also going green, which is not too bad. Why is Meta struggling? That is a 760. When's the last time we saw 760? I know it was 700 before earnings and it gapped up to 760, but so it's basically been 3 weeks. But why is Meta getting hit like that? Meta's Reality Labs post 4.3 billion loss in second quarter. Okay, but everyone knows that they don't make money off Reality Labs. So that's weird that the street's reacting negative towards that. NVIDIA 182, UNH not stopping 2.3. UNH is green. So we are getting some momentum on UNH as well. Palantir right here, 176.97. Open Door 339. Misty, that's down a little bit because MicroStrategy is down. CoreWeave, that's up a little bit even after the CEO sold $300 million worth of stock. Salesforce, this one's been in the gutter for the past couple of weeks. S&P flat, not moving much, which I'll take that. If you give us the end of August, S&P closes at 640, I will take that. That is a win in my book for the month of August. S&P 500 right there, basically down 0.05%, even though we have a little bit more volatility in some of these other names. Nebius, that's flat. Verizon, that's flat. Lyft is down 1.3. You did have Bridgewater buy a couple million shares of Lyft. You had some other hedge funds buy Lyft, so Lyft did get a bid last week. Nubank right here, that's down about 1%. DJT is down 2%. Grab 510, that's down 0.5%. ASML, that's slightly up. Sunrun, another solar play, that's up 15%. HIMS, down 1.7 on that Novo news. Oscar down 1.15. Netflix slightly trying to make its way back up to 1,300. PayPal 69.52. Uber 92.60. That's a little green. And then Hoodie potentially breaking even right here, 113.40. Trying to get back to 114, but that's still red. And Apple 232 is red. ASTS, that one is up 48.54. Whereas Rocket Lab, that one's also slightly up 44. Rocket Lab's kind of been stuck around 42 to 45 for the past couple of weeks. Micron is up 1.4. Micron's up 1.4. It's not too bad. Lulu got a bit of a bid last week. It looks like it's getting a little bit of a bid right here, up 2.3. What a hedge fund guy bought Lulu? Forgetting the name, but there was one of those guys. Oh, Burry bought Lulu. So yeah, he seems to be bullish on it along with UNH, but it looks like he's trying to bottom fish and try some of these potentially deep value plays. Micron right here up 1.4. Where's SMCI? These guys are still 45.50. They got hit post earnings a week and a half ago. Haven't really recovered since then. Bitcoin 115. Palantir slightly green at 177. Open Door 344. And then CoreWeave 101. SoFi trying to get back to 24. SoFi trying to get back to 24. TeraWulf, I believe, got a new deal this morning, if I'm not wrong. So the big news for them last week was Google took a stake in them, a $3.8 billion stake. And then I think they got a deal this morning, which is why they're getting some excitement. So that one is getting some momentum. Wow, Reddit all-time high. Dude, Reddit, I actually regret Reddit. I had this thing at freaking 115 earlier this year. And after February, it was getting a little too aggressive for me, and I tried to de-risk out of some of the high beta plays I was in. See, Reddit's a classic example. Reddit, and I didn't like their multiple either. I didn't like their multiple, and I just felt like the street was giving it way too aggressive a multiple. But I was wrong. Like if you're growing in this market, you can handle a higher multiple. In 2021, again, let me say this. This is something that's very important to understand, because people say, oh, if you're growing but you have a multiple, that's toppy. It's like, no, 2021 was toppy because companies weren't growing and they still got a multiple. If you're growing, you deserve a multiple. Are some of these multiples a bit more aggressive? Sure, you can give that off to AI as the tailwind in general that's making people a little bit more excited. But in 2021, there was zero growth across the board and companies got stupid multiples, which is why we had all these dumb SPACs. And I kind of felt that was happening in February, so I got out of Reddit. But realistically, Reddit's growth was not to be faded, because that thing went from 115 to 250. And from IPO, it went from 30 to 250. It's done incredibly well. So if you're in Reddit, congrats. You've been able to hold through it, and the street's been rewarding you with good growth. And if Reddit can keep up the growth, it doesn't have to go higher, but it definitely doesn't need to go back down to 115. Yes, exactly. 2021 was also interest rates, right? Interest rates are not, like, the fact that people are willing to buy a Reddit when they can get 4.5% in a money market fund without taking any of the risks that comes with Reddit shows that people are valuing the equity risk premium, versus in 2021, there was nowhere to get a yield on your money because interest rates, again, were zero. And so money had to come into a theoretical Reddit at the time, even if the earnings weren't that good. Like, I think one thing to understand is that in this market, if your earnings suck, you will be disappointed. You will not get momentum. You will not get the premium. And I think that's very healthy. That also leads me to believe we're in a healthier bull market, because if you get a pop on earnings and you don't have the growth, that's scary, because then people are buying it for the hell of it. That's not what we saw this earnings season. Like, if you put up the numbers, you got the growth, like a Meta or Microsoft. Meta right here now below 760, down 3%. If you didn't, then you got punished. Open Door, 358. Wow, Open Door. There you go, 12.5%. 12.5%. SoFi, classic example. SoFi, there you go, 24. They put up 44% revenue growth. The street was like, all right, we're taking it higher. It went from 20 to 25 that day. Then the dilution kind of messed it up, but now the street can overlook the dilution, and it's at 24. So if SoFi did not put up that earnings growth, I don't think SoFi would get them. If Hood did not put up the earnings growth, if Palantir obviously did not put up the earnings growth, look at Tesla. Tesla has not put up the earnings growth, and Tesla's been flat. Now, I know some people think Tesla should be like below $100 or something. That's being way too bearish on just the nature of their potential. But it's not like Tesla's mooning this year. It's like, no, they have really bad earnings. We got to be lucky that Tesla's not going down into the 200s, but it's also not really going up that much. But Meta is putting up earnings, and that's why Meta is getting some momentum. UNH right there, 310. That's down that's up 1.9%. Bullish, that stock went public last week. Does anyone still own this? It's down 5%, still up a double from IPO. So if you got in at like 30, 33, you're still up. But it is down from 118, which is where it peaked the day of the IPO. The market will turn red when Walmart comes out. It says tariffs is causing a price rise. I mean, look, that is very possible. On Thursday, when we get Walmart's earnings, that is something that we definitely have to pay attention to, because they could signal some weakness in the consumer. But in Q1, Walmart didn't really sound that concerned about tariffs. They said, hey, it's an issue. We're learning how to navigate it. Besant had dinner with the Walmart CEO, and potentially Walmart's going to eat some of the costs. Now, I don't think they're going to eat all of the costs, but it depends on how concerned they sound going into this quarter, with Target, Home Depot, and Lowe's as well. And if they're not as concerned and they're able to navigate how the tariffs are taking place, then that's also going to be something that's important for the market. But that will definitely be an important earnings on Thursday. And who knows, maybe that flips the entire narrative. We're going to have to see. But we'll get those earnings this week. Tesla right here, 332. Applied Digital, that looks like it's at all-time highs, 1510. That's up 7%. Not too bad. Again, Open Door getting some love off of this new CEO search. That's why it's up 14.5%. So we're going to see if that can hold its momentum. Netflix right here now goes red. Lemonade also getting a lot of love, 57.72. This thing was 40 last week, had a great earnings. That one's up. If they had a crappy earnings, they probably wouldn't be up, but they executed on their earnings. Uber right here slightly down, and then AMD. I mean, AMD, another example. They had a crappy earnings. This thing went down to 165 and recovered after some reports came out about China, the MI 450. But I think it's healthy when the market rewards and takes away the gains from companies based on earnings. Duolingo, that's actually another example. Duolingo, great earnings. It was up 40%. And then GPT-5 came out and the market got scared. But the reason it's up 7% right here is because one of the big banks upgraded them to 450 and basically said people need to stop freaking out about the AI stuff. But Duolingo right there, 352. That's up 7.5%. One thing that people are saying around Open Door is that they should now buy Bitcoin. That's kind of the new thing that the retail investing audience is saying about Open Door. I don't think it's the craziest idea just to save the stock. I mean, if they became a Bitcoin treasury, they have 800 million in cash. Let's say they bought 200 million of Bitcoin. Like, I don't even think they need to buy it for Bitcoin to go up and for them to get leverage. I think they need to buy it so that they can incentivize new Bitcoin stock buyers to get excited about Open Door as a Bitcoin proxy. They've already got a lot going for it in terms of the new CEO. You've got this retail audience. I mean, if they could buy some Bitcoin, who knows? That might, I think, accelerate interest in the stock. So I'm not opposed to it, but not sure if the new CEO would actually go down that route. BBAI, that's green, even with the dilution. Street's okay with it, or well, it almost was green, 592. It was slightly green. That one is now red by 3.5. SoFi, 2394, just below 24. Open Door should accept Bitcoin to buy or sell homes. You know, that wouldn't be crazy. I mean, they probably don't want to do that, but in terms of just incentivizing more people to see them as a crypto proxy, that would be a move that I think would get people excited. Bitmine right here down 7% now on the day. Hoodie down 1.2. But as of now, I think it's running because of the search for a new CEO. Open Door 18%. And if they put in a CEO that can really inspire retail, I think this goes higher. If they put in a suit, I think it sells off. But I don't think they would be dumb enough to put in a suit. I think they would put in someone who can actually get people excited. But we got to see. Why is Meta down? Again, I don't know. This one's weird to me. This one's very weird. I don't see any headlines. I don't know if you guys see any headlines. I don't think it's because of Reality Labs posting a loss. Also, that was news that came on earnings. That's news from a couple of weeks ago. I don't see any major headline outside of that Reality Labs loss, which I don't think is that big of a deal. Oh, this headline did come out last night. Meta is expected to unveil their first smart glasses with a display next month, and the glasses were expected to cost $1,000, and now Bloomberg is reporting the glasses are expected to start at $800, which I think is so bullish. I think Zucks is being so smart. Like, they don't need to make money off the glasses. They need to make money off people being in their ecosystem. If they can get that thing to be as cheap as possible and break even lose a little bit of money on it, but get people to buy the glasses, I think that's a smart thing. But I don't think that's a reason why the stock's down 3%. Like, there has to be something else that's happening. Yeah, it was just at all-time highs on Friday, correct? And now it's down right here. You know, I don't have any Meta. I mean, you never know. Meta gives you a good dip. I've always wanted to own Meta. I just wish this thing was $80 versus $800, and they did a split. But I don't know. We got to keep an eye on it. We got to see how low does it actually get. I mean, this is exactly where it pumped to after earnings. It went from 700 to 760. And then after the coming days, it got to 790. So I wonder if 760 is the real support where it can hold up at. Reddit right here, 249. SoFi, 2389. Open Door, 370. Lulu, 203. Enphase, that's up 5%. Duolingo's up because they got upgraded today to 450 by KeyBank. And so, again, KeyBank just came out and said, hey, this AI killing Duolingo stuff is stupid. And we advise clients to buy shares ferociously based on their earnings growth, which I can't even disagree with their report, dude. I think the AI killing Duolingo thing is really stupid. I do not think just because you have a translator, people are not going to want to learn new languages. So, like, I don't think people are learning languages as a necessity. I think they're learning it more so as a luxury. It's like a hobby that people want to get into it. I'm sure there's some part of the population that's like, I really need to learn Spanish for my job and Duolingo is helping me. But like, if you need to learn Spanish for your job, you think you can go to your job with your phone in your hand every day and like talk to ChatGPT in English and then have it translate and share the phone speaker to someone's ear in Spanish? Like, that's ridiculous. No, you need to learn how to speak Spanish. If your job requires Spanish or French, you can't just have GPT do everything for you. Like, that's not how it works. And if Duolingo becomes the go-to app for everyone in that world, either from a necessity or a luxury perspective to learn a new language, I think they're the winner, and they're showing the earnings growth to be able to be the winner. So I don't have a position, but I definitely don't think that AI is killing it. I just think that narrative is very, very silly. But ultimately, we're going to see how the market interprets it. If you don't know a new language by the time you're 35, you're never going to learn a second language. Low key, you might not be wrong. I do know how to speak Hindi. Now, I'm not the best at speaking it, but that is my second language. Like if I'm in India and I need to like speak in Hindi, I can do it. They're going to know immediately that I'm American and they're going to charge me extra on whatever I'm ordering at the store because they're going to easily tell that I'm American, but still, I can at least kind of speak it. So there you go. The argument is different. AI will replace it for language learning. Yeah, but like that means that someone like, so Sam Altman's demo was like someone coding up a language app and then like using that coded up GPT language app to learn language. I don't know, bro. I don't know if everyone's going to go into GPT-5 and say, hey, code me up a language app, code me up some Spanish flashcards, and then learn it right through there. I feel like Duolingo's created an ecosystem that is highly differentiated when it comes to learning a language. Maybe I'm wrong. Maybe everyone's just going to use Grok or GPT-5. But I don't know. It just seems a little unlikely long term. Like these companies have deep moats, dude. It's not easy. When you have that many, when you have 200 million users a month, like that stuff doesn't just go away overnight because of AI. In fact, I think AI becomes a tailwind, but obviously the market's going to have to determine how they think of it. I will open up the stock draft in 3 minutes when we get the updated prices. So at 9:50, we'll get the updated prices. Then we'll see what's going on in the stock draft. UNH right here, 309. That's up 1.72. Who's buying UNH? Is anyone still loading up on this after Buffett bought? This one seems to be the new darling of Wall Street if they can continue to not only get rid of the DOJ investigation and kind of downplay that stuff, but also if they can just increase their guidance because it looks obvious that they sandbagged in Q2 when it came to EPS growth. But every super investor not named Bill Ackman is buying in heavy. Got leaps, got more, bought 3,000 more, bought 100 shares at 270, selling calls on UNH, have it at 260, have it at 291 a share. Okay, so it seems like more people are buying it. Maybe some of that money is rotating out of other names into UNH. BMNR down 7%, 53.42. So this one goes red. I don't even think Ethereum's down that much. I think, yeah, Ethereum's up right now. I think it's more so some of the dilution because they just bought another 300,000 Ethereum. And that's why that stock's getting hit. But also Ethereum down from 4,700. It's not the best for BMNR right now. Have 2027 leaps on UNH. Hood taking a hit. Is it taking a hit? I would not be surprised this week if crypto takes a hit for Hood to take a hit. Yeah, 111. Hood's been kind of stuck between 107 and 114 for the past 2 weeks. I bought at 107.50. I think it got to the low of 107.20. So 107.20 was the low last week. I don't think it's crazy for it to stay in that range. I think you got S&P coming up, hopefully. You got a big event coming up. You got banking coming up. I think you have a lot of tailwinds. But staying in this range to me is not the craziest idea. Big Bear is down 4.5%. Open Door now losing a little bit of its steam. It was up 20%. Now it's up 14%. And Walmart is flat on the day. SBET's recovering a little bit. SBET, yeah, that was down 3%. Now that's down 0.5%, which is not too bad. Palantir, again, this one's been quiet since earnings, which I think is okay. The biggest news we had is Andrew left, is shorting it. That's fine. I don't think it's crazy for Palantir to be at 174. I don't think it's crazy for it to get down to the 160s. Obviously, I wouldn't love for that to happen, but it is trading at a pretty aggressive multiple. The key thing right here is this is the first like kind of drawdown, if you even want to call it that, from 190 to 174. Again, not that big of a drawdown, but that is one of the first meaningful red, I guess, down trends that it's been in from 189 to 174. The question is, does it go lower? Do we see like the 170s, the high 160s, or does it rebound here? Is there enough buying pressure in this area? I think JPOW is going to determine a lot of that. But so far, Palantir has been able to hold it over the past few days. So now we got to see if that can continue. Palantir right there, 1.6%. Lumen, that's up 7%. CoreWeave, is that getting up a little bit? CoreWeave is up 0.5%. What's the reentry for BMNR? You know, I was looking at some of the technicals last night. There's a gap fill at 30. So I wouldn't wait for 30, though. My target looks like 42 42 seems to be a relatively decent price now. Well, the NAHB has changed since last night because I didn't know they bought this much more ETH, but 42 is what I was looking at as a price where I'm like, all right, not that crazy to buy a little bit more if it gets there. I don't know if that happens. It's obviously super volatile. You got a lot of buyers. I mean, dude, 10 million shares have already been traded in the first 20 minutes. So you got people that really use this stock to trade. And with more shares, you just have more potentially buyers that are willing to engage in it. So I don't know if we get 42. That would be a target that I'd be looking at. Yeah, 38 to 42, agreed. 52 and 42 are both support, 100%. Yeah, that's what I was looking at last night as well. So if we get 42, I probably would buy. I know I've been saying I'm not buying BMR, but if we get that low, I'll buy. I'll buy 100 shares. I'll get into it. If we don't, then we might be able to sustain these levels. Okay, stock draft. What do we got? We got Matt's up 22.4, Tanner's up 6, I'm up 15, Steve's down 1.2, Chris is now positive. So now Steve is last. Steve is last. Chris is now number 4. He was number 5 for the past month. Steve, what is hurting Steve? Hims, Hims is doing it. Hims down 24, CrowdStrike down 11, Salesforce down 7, PayPal down 3, and MicroStrategy also hurting him down 6. So Steve is now down 1.2. Chris getting some recovery from UNH. He's now green on UNH. Matt is still up 22 because of Accelera, Oscar, Celsius, SoFi, ASTS, Rocket Lab, and Amazon. And then I am 15%. Duolingo is the one that's hurting me the most, down about 26%. So there you go. So it's Matt, Amit, Tanner, Chris, and Steve. That is the order right now for the stock draft. Is Roblox tanking? Roblox down 5%. All right, so Roblox getting a little hit as well. Again, we had those stories come out last week about Roblox, and basically child predators using the platform as a hunting ground, and that stuff is not good, obviously, for Roblox. And those stories have been around for a while, so that could be leading to some of the brain damage right here. That went down 4.2%. How big is Matt lead? So Matt's up by 7%. So he would have to lose 7%, or I would have to gain 7% just to break even with him. So he has a really comfortable lead, especially if you don't think none of his stock. I mean, the most prone stock that he could see weakness in, I think, is Accelera, just because it's more of a risky stock. But I don't think SoFi is going down that much. I think Rocket Lab's forming a good base right here. ASTS, you could say, is risky because there's no earnings, but ASTS has been able to hold this $48, $50 range. Amazon, he's only up 5%. So if Amazon goes higher, that's good for him. I mean, isn't it pretty good? I'm going to need to have some outperformance to beat him versus, I think, him to have some down performance. Duolingo right here up 7.5, UNH up 2.3, and then Open Door. There you go. High of day, 20% on Open Door. 20% on Open Door. Ethereum goes red. Bitcoin, oof. It hit 114 last night. It's $200 away from going back to 114. That is probably why Hoodie is getting hit. Hoodie, there you go. She's getting hit. Covered calls on Hood. If you have them, they are probably doing okay. And crypto is helping out those covered calls for Hood to start getting a little red. Unity, this one had a good week last year. Is this up right now? No, this one had a good week last year. This one had a good week last week. 37.91, that's flat. That one is flat. Yeah, for Hood, I don't get excited until we see below 105, dude. I bought at 107 last week. I mean, we really got to see a meaningful dip for this to get exciting. Otherwise, it's just whatever. So I would want to see below 105-ish, realistically low hundreds to get very excited. I don't know if we get there. I mean, if Ethereum goes back to 3,800, that could do it for us, but we got to see if that happens. Big Bear down 4, Open Door up 19. Open Door trying to go. It looks like it's trying to go for $4, 20 cents away. It is trying. Maybe it gets back there. Oscar at 16. That's actually green, right? Yeah, Oscar up 2%. Oscar and UNH looks like they're moving together. UNH as well. Up 2.4%. Celsius touched 60, dude. What a stock this year. What a stock. If you're in Celsius, congrats. I mean, year to date, 118%. Talk about some pep in your step. Talk about having some energy in your stock. I mean, goodness. This thing was left for dead at 18 bucks. And it's just done great. Celsius having a phenomenal year as well. Yeah, I see a bunch of you guys have Celsius, which is good. I mean, look, it peaked out at 99. That's when it got too toppy last year, but at 18, seems like it was a bargain. And you got some momentum. SoFi right there, 23.62. Do we have any macro data today? Let me see. Oh, we didn't even talk about Trump and Putin, so we'll talk about that. We might have a live stream about them later. We're going to get today's August 18th. We are going to get the housing market index in 3 minutes, the NAHB, which I think is that for home builders? Yeah, National Association of Home Builders. So we're going to get the housing index in 3 minutes. We'll see how that affects some of these real estate companies. Zillow, which was another big buy in some of these 13Fs as well. Zillow right there, 81.23. That one's flat on the day. Okay, cool. So let's talk a little bit about Trump and Putin. So they met on Friday. They had a summit together. Essentially, the understanding from the summit was that Putin is ready. The big takeaway is that Putin is ready to end the war. He doesn't just want a ceasefire. He's ready to end the war. However, he's ready to end the war only if he gets the eastern part of Ukraine. Trump said it was a very productive meeting. He said it was good that both sides got to talk and they actually got the ability to get in a room together. The question is going to be, does what Putin wants, is there any symbiotic relationship with what the Ukrainians want and what the EU wants? And a lot of the EU audience is coming, or the EU officials are coming to the White House today, and they are going to be speaking to Trump. Trump tweeted it this morning. I am totally convinced that if Russia raised their hands and said, we give up, we concede, we surrender, and we will give Ukraine and the great United States of America, the most revered, respected, and powerful of all countries ever, Moscow and St. Petersburg and everything surrounding them for 1,000 miles, the fake news media and the Democrat partners would say that this was bad and a humiliating day for DJT. But that's why they are the fake news and they are badly failing radical left Democrats. Thank you for your attention to this matter. So Trump thinks the media is completely against him, even though he thought he was able to get some level of progress within Ukraine or within the meeting in Russia. But it's now going to be up to Zelensky and these EU officials that are going to be meeting at the White House today. I think that will be live streamed. It might not be, but if it is live streamed, I'll try to cover it. And they're going to be hearing what Putin's proposal was. I think Trump has already told them, but they're going to be hearing it in person now. As you can see right here, Trump said, big day at the White House. Never had so many European leaders at one time. My great honor to host them. And we're going to see if we can get a deal done. We're going to see if we can get a deal done. Hoodie, there you go, below 110, down 3.7. Now, I think a wild card for the markets is if Zelensky is willing to agree to what Putin told Trump he'd be willing to do in order to officially end the war and not just get a ceasefire. It seems unlikely that they're easily going to give up parts of the land, but this is when the EU leaders, Zelensky and Trump, are going to be in a meeting together to try to figure out what can happen. And so I think we'll get some more updates later today on that information, but we're going to have to see. He's not going to agree. Look, that's my gut reaction. He's not going to agree. But you got a lot of European leaders that also want this war to end, and they might be in the in the meetings as well, telling him, hey, it's time to come to a conclusion. But I don't know. Today we're going to get a much better understanding of how this ends up playing out. Robin right here, 110.33. That's up a little bit. Palantir 173, Tesla 322, Nvidia 182. You got Tesla and Nvidia actually going green. S&P, it's actually close to going green. It's only down 0.09%, so you don't have any meaningful red there yet. SoFi 23.47, and then AMD 176. This was Trump over the weekend talking about the meeting with Putin. Let me pull this up right here. And this is what he said. If I can pull it up. Where did I put this clip? Did it just disappear? I think it just disappeared. Let me pull it up real quick in a second. But at its core, he was pretty amicable. He said, hey, it was a good meeting. Question is if Zelensky is actually going to agree to the extent of the promises that they got in that meeting. Open door, dude. That's getting very close to $4 right now. Getting very, very, very close. If they get a new CEO and they get a really good CEO, I think it would be exciting to see what's true. Also, Eric Jackson is going to be with Anthony Pompliano today. So they're going to be doing an interview a little bit later today as well. And we're going to see what they say there.
So we get them. This does not impact the United States as much as it does our allies in Europe.
It's true.
The Middle East, when we get involved in the Middle East, but you're doing it anyway. Now, why? Is it to save lives?
Well,
Do you want to save the world?
Yeah, number one, to save lives in all cases, because wars are wars. When you see what would have happened with Cambodia as an example. Now, I'm not involved, but I was involved in negotiating a trade deal, and I said, you guys are going to be fighting Thailand, Cambodia, so many different. Look at India. Take a look at India and Pakistan. They were shooting down airplanes already, and that would have been maybe nuclear. I would have said it was going to go nuclear, and I was able to get it done. Number one is lives, and number two is everything else. Wars are very bad, and if you can avoid them, and I seem to have an ability to end them, to get people together.
This does not.
So obviously Trump's going to try to do the same thing right here when it comes to Russia and Ukraine. We got home builder sentiment. Let me pull that up right here, and let's see how this potentially affects the market today as well.
August on the NAHB index, the street was looking for a 1-point gain. Anything below 50 is considered negative. Last August, it stood at 39. Now, the builders pointed to elevated mortgage rates, weak buyer traffic, and ongoing supply-side challenges. Mortgage rates, though, actually came down nearly a quarter point from the end of July to the first few weeks of August, but that clearly didn't help much. Now, of the index's three components, current sales conditions fell 1 point to 35. Sales expectations in the next 6 months was unchanged at 43. And buyer traffic did increase 2 points, but just to 22, so still the lowest of those three indices. Now, 37% of builders reported cutting prices in August. That's down from 38% in July, but it's been at 37 or 38 for the past 3 months. The average price reduction, 5% in August. It's the same it's been every month since last November. But the use of sales incentives was 66% in August, up from 62% in July, and that is the highest percentage in the post-COVID period. So again, the builders relying on those incentives. Guys, back to you.
Diana, I'm curious why estimates were for a gain and kind of what led to the gap there between expectations and the actual numbers you saw.
Mortgage rates. It's as simple as that. When you see mortgage rates come down, that's why when mortgage rates come down a little bit, you see the builder stocks go up, whatever the day, whatever the situation. So when you saw mortgage rates go down, I'm guessing all the analysts said, well, builder sentiment must go up. But the builders on the ground are really seeing who's coming in, who's putting money down, who's really able to afford these homes. And at the current rates, even a quarter point lower, they're just not seeing it. So that's probably what's behind the miss.
Yeah, makes a big difference there. Diana, thank you so much.
All right, so kind of a nothing burger, not seeming like it's going to be that big of a deal. Open door, not getting a hit off that news, basically at high of days 380. Again, that is one of the biggest real estate plays that people are thinking of. Zillow right here, also not really making a move. So one of the good things she mentioned is that although the index is down, rates are down as well, which is good. I mean, last week we had the lowest rates in over 4 months, 6.47% on a 30-year fixed rate. Which, you know, obviously is better than paying 7.5%. At one point in February, it was like 7.9%. So you are seeing rates come down from that perspective. And if Fed rates come down, maybe mortgage rates will be affected to the downside as well. Pound right here, 172, that's down 2.6. But it looks like the actual index itself not really affecting the broader market. Lennar right there is up a little bit. S&P's flat. It's down 0.01% on the day. Andrew Short came out, or Andrew Left came out based on his short on pound here, and he said $40 is generous for pound here. So you got Andrew Left basically thinking this could be a generational short. I don't know if it's going to be that easy, but as you can see right here, this is the note they put out this morning. OpenAI at 500 billion puts Palantir at 40, and that's generous. This morning, we read that Sam Altman stated that the AR market could be in a bubble. Altman isn't shorting Palantir. He's simply telling the truth. The market is frothy, and no one knows it better than the man who built the most valuable AI company in the world. Sam Altman didn't literally say the AI market's in a bubble. Sam Altman said, hey, there might be some over-exuberance around AI. And so people are framing that as a bubble. That's one of the narratives that it looks like, Andrew Left is using. Last week, Citron's Andrew Left appeared on Fox Business, suggesting that a $40 price with Palantir would start to look cheap. OpenAI, the undisputed leader in AI, is achieving revenue and user growth at an unprecedented level in technology history. Its new $500 billion valuation provides a true benchmark for evaluating Wall Street's favorite trading stock, Palantir, a company that is detached from the fundamentals and analysis. Let's simplify this by working backward to demonstrate why Palantir would be fortunate to achieve the same valuation multiple as OpenAI, and they go deeper into the report and say that it's undervalued. So look, again, he's using numbers to make this argument. I think if you use numbers to make the argument around OpenAI or around Palantir being expensive, then the numbers are on your side. Palantir is obviously incredibly expensive on the numbers, but the numbers were expensive on Palantir when it was at 50. So if you want to say, all right, like it deserves to go back to a $60 billion market cap growing at 45% on the top and the bottom line, which $40 would basically, or $40 would be like 80 billion market cap, then sure. But I don't know if the street's going to easily give it that much of a discount, given all the qualitative elements of Palantir and given the fact that they are the fastest growing software company on the planet that is also seen as a pure play AI. Not saying that the numbers don't say it's expensive. Obviously, $400 billion market cap, it's up there. Does it need to go down to 40? I don't know. And so if he continues to short it, now you're going to see a lot of Andrew Left propaganda, and I don't necessarily mean propaganda in a negative way, but it is what it is, right? It's going to be his own interpretation to get people to realize this is the most overvalued company in the world. It's either going to work or it's not going to work, and it'll be up to the market to see if they think Andrew Left is going to be right about this long term. Yeah, he's so original. That's the other thing. Like this bear case is not original. It's just like the numbers are aggressive. It's like, okay, but the numbers have been aggressive for a long time. Like if you were going to short it, you would think they would have a much better way to explain their short other than it's overvalued. And you're not really getting that. But it's going to be up to the market to decide what happens with Palantir. Elf right here, that's up 5.3. Open door is at 387. Very close now, 390. There you go, 392. It is 8 cents away from hitting 4. 4 would be very psychologically exciting for the open door bulls if we can get there. Amit, I have E-Trade. I want to switch to Hoodie. Is it a painful process? Should I switch? I'm just in stocks in a few long positions. I think you should wait until Hood introduces the 2% match or the 1% ACAT match, which I think they will do this month as a part of their Hood month. But no, the process is pretty simple, dude. I actually went through the process. I had Public. I had a little bit of money on Public, and I went through the process of bringing it to Hood just to see what it was like. It took 5 days. That's it. It was very quick. It wasn't like a hassle at all. And all your positions stay the same. Your cost basis stays the same. Like everything that you had on one portfolio just goes to Robinhood, and you potentially get 1% of a match on top of that. So I'd wait until they give you that ACAT match again, because they probably will. And then I would switch. My camera went black. Of course it did, because this camera, no matter how much you charge it, will never stay charged. Yes, 5 business days. Exactly. 5 to 7 business days. So, I mean, you do have to wait a week, but like if you're bringing over a lot of money from one brokerage to another, you know, like it is, they make it the least complicated it could be versus some of the other platforms where you have to sign like 15 pages of documents and all this stuff. Like with Hood, it's relatively simple. You put your account ID from one brokerage into Hood and they handle the rest. At least that was my experience. And it wasn't too bad. When you transfer, do you realize the gains? No, they do not sell off any of your positions. They do not sell off any of your positions. So it's just literally transferring it from one app to another. Oscar up 5% right here. That's green. All right, so Oscar getting some momentum. Hoodie still trying to hold 110. So it looks like this national builder index for homes was not that big of a deal. Oscar actually trying to break 17 now, 1650. We haven't seen this in a couple weeks. So Oscar really getting some momentum right here. And again, in regards to Trump and the EU, it looks like these EU leaders are either at the White House right now or they're on the way. Last time Trump and Zelensky had a meeting, it obviously did not go the best. Oh, wow. No, they're going to meet. They're going to meet. Trump meets with Zelensky and European leaders at the White House. The stream is already set up. I don't know when it's going to happen. It might be an hour from now, but the stream is set to go live. The White House has the stream set up as well. There you go. I thought they would be live streaming, but it's official. They are going to go live. So we're going to see what the dynamics are like. Hopefully it's not as crazy as it was back in February when Trump and Zelensky were together. But obviously Trump really wants to get a deal done. I'm sure the European leaders do as well. So maybe we get some updates on that later in the day. Rocket Lab right here. That's up 1%. SoFi 2350. Open Door. She's trying. She did not get 4, but she's trying. I have Open Door covered calls for $3 September 12th. When should I roll them? Well, it depends on what your break even is. Let's say you got 50 cents. So you are now 30 cents above 350, which would be your break even. You know, it's hard, right? Because it's like, do you trust that this 22% pump is going to stay? Because last time this happened, it fell to 240 in the same day after pumping to like 490. I don't know. I would give it a couple days. I would just see. Unless you think it's running away to $7 anytime soon, and then your calls are screwed, and you probably should let the shares get called away, then it is what it is. But I would give it a few days and see, can this pump hold? And if this pump holds and it like consolidates at this level, then I'd probably roll it after that. But it does seem like there is heavy momentum today. And they can continue the momentum if they announce this new CEO. Chris Camillo is shorting Google. What? What? He's shorting Googs? Like legit shorting? Hold on. Wow, he's legit short. Holy crap. He's shorting the Googs. Oh my. Okay, do we want to read his thesis? He just posted it on Twitter. Hoodie down 3, UNH up 1, Celsius up 4. What? I knew he was bearish on Google. I didn't know he was shorting it. I knew he was bearish. I did not know he was shorting it. Okay, here you go. Let's just let's read through it real quick. Let's see what he said. Here you go. Google's reported search query growth may be AI driven, not human. Evidence is piling up that people using AI queries through ChatGPT are generating Google searches and clicks at scale. That can mask slowing human search activity while still printing growth. Evidence is piling up that people using AI queries through ChatGPT are generating Google searches and clicks at okay. Example, Apple's Eddie Q testified Safari searches fell for the first time in 22 years because of AI use. Alphabet stock dropped 9% that day. Okay, Google's response, we continue to see overall query growth in search. Q2 showed $54 billion in search revenue, 12% year over year, but this came right after Apple testified that human searches are falling. How is that possible? Dude, is he saying they're cooking the books? Is he saying Google's cooking the search query books? Let's talk about Google Trends. Investors treat it as a clean read on relative search volume, but really recently when stacked against other signals, the picture doesn't line up. Lululemon product terms are spiking this summer to holiday level highs. In nearly 2 decades analyzing Google Trends data, I've never seen a mature brand's products broadly spike like this outside peak seasonality. Implausible given that cart swipes, web traffic, app engagement, and store traffic show only modest improvement, and it's not just Lululemon. Okay, so he's saying the Google Trends are cooked now as well? Others are noticing this too. Social ARB investors are flagging Google trend anomalies across numerous brands and keywords this summer. I suspected that AI might be driving these odd patterns, so I ran a micro test. Phrase organic Abercrombie socks had 0 search history as it's a made-up product category. After a handful of ChatGPT prompts, it showed up in trends within 24 hours. Trends docs say that Google filters out its own AI searches, but makes no mention of external AIs like ChatGPT. The socks test suggests AI traffic leaks through. Wow. So he's saying that people searching for something on ChatGPT is now getting queried by the Google search engine, and it's popping up as a quote unquote legit query, which is leading to the query growth we're seeing year over year, which came in way better than expected in Q2, which is why the street got excited. Chris Camillo saying all of that shit is fake. He's saying all of that is fake. An AI app developer I spoke with explained that a single AI research request can spawn hundreds of Google queries and clicks. This dynamic could inflate query growth even if human searches are slowing. Now, Google Ads. This is where the money is made and where policy clarity matters. Google says you don't pay for invalid clicks, but isn't it suspicious that their AdWords policy does not mention clicks from AI apps or chatbots? If AI traffic is interacting with ads, advertisers may be paying for it without knowing the true value of that AI engagement. Why it matters, advertisers could be unknowingly paying for AI traffic. Investors and analysts leaning on Google Trends data may be misled, and Google stock is at all-time highs could be partly built on revenue from query growth that isn't human. If Google is pushed to disclose and bill separately from AI versus human queries, expect volatility. Finally, if you're seeing AI-generated search traffic from Google trends, anomalies, reply with receipts. If I'm missing something or misinterpreting, push back. Disclosure, I'm short Google, seeking truth and transparency in Google's policies and disclosures. Okay, that is a lot to digest. Google right there, 204. Palantir is getting hit today, 173. That's down about 2%. The reason this is bearish is because essentially Camillo is saying, hey, in Q2, the street expected 9% search growth. Google came in at 12.5%. That's a big beat. But if all those queries, those literal queries, not the search revenue, but the literal queries of search were up because of these AI searches that are now being indexed by their search engine and counted as a search, even though the search is not happening on Google, it's happening on a chatbot that is indexed by Google. I guess that's an argument for why the query growth is not as substantial as the street may be thinking. And to an extent, I mean, you can't get around it. He's accusing them of cooking the books, because if that's the case, Google is, if he's correct about this, intentionally showing query growth that is not actually happening on their platform. And that, now look, I don't know if that's a massive bear case. I mean, it's definitely in his eyes bearish, because it's not the type of query growth that the street is being told is happening. Is that a bear case around their growth, their numbers, their net income? Like, no. But again, Camillo's thesis has never been around the numbers. His thesis has been around, he thinks Google's dead. Like, I think he put out a short thesis, even though he wasn't short the stock, about 4 months ago when it was, 3 months ago when it was at like 150. Now, obviously the stock has done very well since then, but he, since the Apple query stuff, the Eddie Q testimony, he has not felt bullish on Google. Market doesn't care, correct. Market does not really care. I don't know if Chris Camillo is going to move the market on this, but he's definitely going to get people thinking that Google could be cooking their books right here. It's very plausible. However, advertisers caring or Google being transparent on this issue anytime soon is a joke would have to come from a lawsuit. Yes, I mean, 1000%. Google's not going to come out and say that this has been happening. But also, if it's not affecting the revenue growth, I don't know if the street cares. As soon as it starts affecting net income, EPS growth, revenue growth, free cash flow growth, then I think the street will care. So that's where I think the short thesis is a little weird, because it's betting that people will wake up and say, hey, it's bad that Google's indexing searches not on their platform, therefore we should like go short. When in reality, even if that's true, if the earnings are holding up, which is what the stock price ultimately cares about, NVIDIA, by the way, 182.40, then maybe the short thesis doesn't have the legs to actually develop into like a genuine reason why Google should be sold off. So there you go. It's one of the first arguments I've heard around Google that's not just like 10 blue links is bad, but rather Google's artificially inflating their search numbers, which, you know, every big tech company is probably artificially inflating some of their numbers. The question is, how egregious is it that Google is doing it from this perspective? 182.43 is what we have right here on NVIDIA. Google right there at 204. Yes, but that affects advertisers' conversion, so they will start advertising less on Google. Okay, so if that does start to happen, then yeah, I think there's a short thesis there. But as per Q2, we did not really see advertisers pull away from Google. And so, I mean, in the next coming quarters, if you see advertisers say, yeah, we just are not getting the ROI we thought we were getting, then that's probably where these arguments would start to make more sense in the context of the numbers. And I guess Chris Mill is saying, hey, in the long term, that's what you should expect to be the downside. And that's what culminates in a short thesis. Bitcoin right here, 115.22, app Lovin, 437. Stanley Druckenmiller did add to his app Lovin position, and then Hoodie trying to get back above 111. All right, let's do a poll in the chat. What do you think? Are you buying that short thesis or no? Let's see what you think. By the way, 51% of you said you expect a green week over red. Chris Camillo, short thesis makes sense. All right, what do we think? Amit, will you buy TeraWulf? I am not buying TeraWulf. I don't really know enough about the business. It does look very squeezy, up 16%. Let me check the short float real quick. But I personally would not be chasing this name. Short float is 30%. Yeah, I mean, there you go. Google bought in. They got a deal this morning. Short float is 30%. I mean, that's why it's up 16% right here. But, the time to get in was before Google bought, because it's up a lot since Google bought. And so I think chasing here, it could still do well, but I think it's just being a bit more aggressive now. Open Door, is it trying to get back to 4? Did it top out at 390? Open Door, 385. Okay, so they're not letting it get to 4 yet. Got to 395. And now it's at 387. Almost 50-50. 55% of you say there's no truth to it. 45% of you say there is a little bit of momentum on it. I'm not buying Oscar either. Look, I like Oscar. We did a deep dive on it. I don't understand healthcare, and I don't want to be responsible for learning all the intricacies of healthcare. I think it's cheap. I mean, if you haven't watched the deep dive, you can watch it on the channel. Like, even if you assume like 5% revenue growth for the next couple of years, it's pretty cheap. But I just don't know enough about healthcare. So for those that got in around that 11-12 range, it's doing well. It was at 23, came back down. Again, I think it needs more clarity from the big, beautiful bill and what's happening with the overall insurance sector in the country. But I think it's also catching a bid because everyone's buying UNH. So people are like, all right, let me buy something that's derivative of UNH, which is Oscar, even if it's not as big as UNH. And that's why it's getting some momentum. S&P, wow, S&P goes green. S&P goes green. Not bad. Did Trump just tweet? Let me see. Okay, here we go. We got a Trump tweet. Here we go. I've settled 6 wars in 6 months, one of them a possible nuclear disaster. And yet I have to read and listen to the Wall Street Journal and many others who don't have a clue tell me everything I'm doing wrong on Russia-Ukraine, which is sleepy Joe Biden's war, not mine. I'm only here to stop it, not to prosecute it any further. It would have never happened if I was president. I know exactly what I'm doing, and I don't need the advice of people who have been working on all these conflicts for years, and they weren't able to do a thing to stop them. They are, quote unquote, stupid, capital stupid people with no common sense, intelligence, or understanding, and they only make the current Russia-Ukraine disaster more difficult to fix. Despite all of my lightweight and very jealous critics, I will get it done because I always do. President DJT. All right, so you got Trump basically saying, hey, people have been trying for years to stop this shit. I'm the only one that potentially has a shot to do it. And I think the meeting today with the European leaders and Zelensky is going to be the first big step on seeing, can he actually manufacture a deal and broker a deal in a way that gets the street to recognize there might be a better chance for peace. But we are going to see. When does that stream go live? Let me see. It might go live closer to the market close. We have a couple streams that are set up, but I don't have the timing on it yet. Let's get an update on what these European leaders are going to be doing in the White House, but looks like that will be streamed live probably in a couple hours. Probably not anytime soon, but it will be happening today.
Global affairs for a moment. Ukrainian President Zelensky and European leaders are heading to the White House. They are due to meet with President Trump. That'll be later today. And that is in response to his Friday summit with the Russian President, Vladimir Putin. Eamon Jabbers is at the White House and has the latest for us. Eamon.
David, yeah, as you say, Ukrainian President Volodymyr Zelensky is expected here at the White House later today to help chart a path forward in the wake of those failed talks between President Trump and Russian President Vladimir Putin in Alaska on Friday. Also present, as you say, are going to be the leaders of 5 European countries who are part of a coalition of the willing backing Ukraine against the Russian invasion. Now, sources told NBC News over the weekend that President Trump engaged with President Zelensky and European leaders by phone early Saturday morning about the U.S. being party to a potential NATO-like security guarantee for Ukraine as part of a deal struck with Russia. Such security guarantees have been a key demand of the Ukrainians as part of any deal to end the fighting. Zelensky took to social media to set some expectations for today, writing, "I am grateful to @POTUS for the invitation. We all share a strong desire to end this war quickly and reliably, and peace must be lasting, not like it was years ago when Ukraine was forced to give up Crimea and part of our east, part of Donbass, and Putin simply used it as a springboard for a new attack, or when Ukraine was given so-called security guarantees in 1994, but they didn't work. Now take a look here at the list of European attendees at the White House today. It is a set of power hitters here. The president of Finland will be here. The chancellor of Germany will be here. The president of the European Commission, the NATO secretary general, the prime minister of the UK, the prime minister of Italy, the president of France, all in the building here at the White House today. And the question for all those leaders is whether they can craft NATO-like security guarantees for Ukraine that are enough like NATO to reassure the Ukrainians that they're real, and yet not so much like NATO that they're a non-starter for the Russian side, which feels very much threatened by the presence of NATO on their frontier. Guys, back over to you.
Yeah, I mean, a lot of that seems contingent on European leaders' willingness or fortitude to supply troops to back up any kind of Article 5-like measure. There's some comments out of Germany this morning that maybe they might be a little too stretched to provide those boots on the ground, as opposed to, say, the British.
Yeah, and then the question here is, in terms of the geostrategic implications of that, do you want NATO or Western forces backing up a Ukrainian security situation and engaging in direct combat with Russians in a year or 2 years' time? That is something that throughout the Cold War, NATO avoided. You know, the Cold War was a war of proxies, not a war of direct confrontation between the West and Russia, for fear that any such confrontation could lead to nuclear holocaust. The idea is you just can't have NATO troops and Russian troops fighting face to face because that can escalate very dangerously. And so the question here is, what kind of security guarantees are real and practical for Ukraine, but not so much that they're going to cause the Russians to walk away from that deal? That's very tricky. And of course, this is the first time Zelensky has been here since that confrontation with Trump and J.D. Vance in the Oval Office earlier this year. So people are sort of walking around, on tenterhooks, waiting to see what's going to happen here. Does this relationship blow up again, or is this a moment of real strength and unity? We'll see.
I would hope that in the meeting today, we don't get a blow up like we did back in February between Trump and Zelensky. I would imagine Trump is going to have a more somber tone now that he is, in his words, very committed to getting this war to end. And you got a lot of European leaders. It's not just Zelensky. So you got a lot of people from across the world coming to the White House today to try to see if we can get a deal done. But I mean, something's got to happen sooner or later, dude. At this point, I think everyone realizes it's time for something to happen. And Trump, it seems like, really wants to get it done, especially because, remember, before he ran, he said he would end the war on day one. Obviously, I thought he was being hyperbolic at the time, but he probably thought it would be sooner than 8 months into his presidency. And so it seems like now this is the closest we've been to getting any progress on the war. Palantir right here down 1.7. CoreWeave's up a little bit. Hoodies down still 2%. UNH down 2. Open Door still up 19. Did not break 395 yet. Oscar, a nice day, up 7%. Really great day for Oscar. And then Celsius as well is up 4%. SBET goes green as well. Where is BMNR? It was down 7. It is now down 6. SBET goes green. Trying to get back to 1988 is what we have. Will he wear a suit? You know, I don't know if he's going to wear a suit. I kind of think he would be like, screw these guys, I'm not wearing a suit. Because that was the big controversy, that he didn't dress up in a suit to the White House and people thought he was being disrespectful. If he does wear a suit, it might be a sign of him saying, hey, I don't want to cause that controversy again. But if he doesn't wear a suit, it could be a sign of him just saying, you guys can't force me to wear a suit. So I don't know. I hope the suit is not the topic of discussion after the meeting. I think JD Vance will be part of that meeting. I think JD Vance and Rubio will be there. So it should be pretty much the entire American delegation, European delegation, and Zelensky all together. NVIDIA, we're trying to break 183. We got close, 182.94. NVIDIA up 1.15. They've got earnings in 2 weeks. We got to see, can they break above 184, which is their all-time high? Let's see if we can go higher. Okay, so it seems like that's the major update with that. We do have one Tesla update. Let me show this right here. And this has to do with Tesla in China and one of their new Model Ys coming out soon.
Time Tesla with a little news, we think, teasing a new car for its China lineup. Our Phil LeBeau joins us this morning with that. Morning, Phil.
Good morning, Carl. This is coming to us from Reuters, which is citing a post on Weibo, the social media site in China, where Tesla has said, get ready for the Tesla Model YL coming soon. What is the YL? It apparently will be a 6-seat long wheel version of the Model Y, only sold in China. And that's important for a couple of reasons. One, we've talked about how brutally competitive the Chinese market is. Sales were down 8.4% in the month of July for Tesla in China. It needs fresh models as quickly as possible. And long wheel version vehicles sell well in China. It is a popular segment for a variety of reasons. It used to be because you would have a chauffeur, but it's just part of the culture over there. Long wheel versions are important. So now they're going to come out with a Model YL, the L being for longer. And again, it's a 6-seat Model Y long wheel version that will be sold in China. Guys?
Meantime, Phil, you know what I thought of you over the weekend when I saw these figures about the A330. Is it the A3?
Maybe that's why Tesla was green today. Is that the reason? A new, longer Model Y coming out in China? I mean, I guess that could be bullish for Tesla. They're not going to introduce that in the United States, but as he said, Tesla is much more competitive. So that could be the argument. Cybertruck is selling in China now. Was the Cybertruck not selling in China before? Is that like a new thing in China? I thought it was always in China. But if it's advancing deeper in China, then that's a good thing. Again, the Cybertruck, as much as I love the design, it has been a failure. Let's be honest about it. The Cybertruck has not worked as a truck to actually lead their sales. I think it looks cool. I would want one day. I drove one before, but I see a lot of them in New Jersey, but it's not competing with the Ford F-150 or anything like that. And one could argue it was a strategic mistake in 2019 to go after the truck versus just like a minivan or something, like some other type of car that would be more friendly to the masses. The Cybertruck has just not worked in terms of being a car that would actually sell across the entire country. HIM's CEO selling another 128,000 shares at $45.22, 5.7 million. Okay, so last week when he sold 30 million worth of shares, HIM's came out and said it was for philanthropic and tax reasons. I don't know if he had to sell another 5.7 million for philanthropy. I think he probably wants to take some profits. So it looks like the HIM's CEO is definitely cashing out a bit, which is okay. You know, he deserves to. The stock's up still a lot year to date, even though it's down from 60. Year to date, HIM's is still up, I believe, 80%, 78% exactly. So it's not like he hasn't delivered returns to shareholders this year, but he is taking some profits there. He just has a really big heart. Yeah, dude. All this philanthropy, by the way, the reason these billionaires love doing it, I think everyone knows what I'm about to say. UNH right here up 3%. It's a tax write-off. It's a tax write-off. If you give $1 billion to some organization, based on the quality of whatever that organization is doing, you are able to say, hey, gave $1 billion to charity. I can write it off against my gains. And then boom. I've never done a charitable tax write-off. Let me know in the chat. Has anyone ever done that before? I've never done it. I've never, like, it has to be from a 501c3 nonprofit. And that's why, like, when Zuckerberg starts the Zuckerberg Foundation and all this stuff, a lot of it, to be honest, is just a way to funnel money to get more tax deductions against his gains, against his actual stock that he sells, his dividend payment. So that's why every billionaire tends to have a foundation, because the foundation is an easy way for them to just like write off money against their actual gains. I have done it before. Wayne said 10,000 last year. Dude, there's so many loopholes around it. There's like gifts you can give. There's a certain taxable gift. You know, there's a lot of stuff you can look up in terms of different types of donations, but from a tax perspective, there are different advantages. A traditional Tesla truck would have sold way more. Yeah, dude. I think if they just like copied a regular truck instead of made it this whole new Cybertruck experience, it wouldn't have been as cool. But then again, it might not have been as polarizing to the masses as well. S&P basically flat on the day, grab at 514. It was at 508, so got a little bit of recovery. Tesla 333, Nvidia 182, and then Palantir 173. Novo's up 3.7% on the new offer they came out today with for Ozempic, and the $499 per month cost associated with it. So it looks like that's why that's up, and that's why Hims is also down. Speaking of charity, there's different ways that the world's going to operate over the coming years. Here is Sam Altman over the weekend in a podcast talking about the potential rise of wealth inequality, socialism, and redistribution of wealth.
I don't know if something will get nationalized. I don't know if the world will like officially turn towards socialism, but I expect that like social support or redistribution or whatever you want to call it will increase over time as society gets richer and as sort of the technological landscape shifts. I don't know what way it's going to happen, and I expect in different countries it'll happen in different ways. Like, I think you'll see experimentation of like new kinds of sovereign wealth funds, new kinds of like universal basic income ideas, redistribution of AI compute. I don't know exactly what, but I suspect we'll see a lot of experimentation in society here.
Now, the reason this is so important by Sam Altman is because what he's saying right here is basically him admitting, yeah, AI is going to take away jobs. He's saying it without saying it. Now, the Anthropic CEO just flat out said AI is going to take away a lot of jobs, white collar jobs as well. Sam Altman talking about universal basic income redistribution. He's basically saying, hey, there's going to be a lot of people that lose their job because of the models that we're building. And as a result, the government's not just going to have people that are unemployed to the tunes of millions. They're going to need to do something for those people. We saw what happened during COVID. We might have to have some type of a tax on AI companies, some type of UBI, et cetera, et cetera. I don't think any of us know exactly what it's going to look like, but that's Sam Altman basically conceding, yeah, AI is going to take away jobs. Now, what does that mean for us as investors? Barring the existential threat of humanity not having jobs anymore and what that means for society, it means AI is a real thing. And it means that being exposed to equities that will benefit from that, when the CEO of one of the largest private startups in the world is basically telling you jobs are going to be taken away, you got to have ownership in the companies that are going to benefit from that. And that is an NVIDIA selling the chips. That's a Tesla potentially replacing those jobs with humanoid robots. That is potentially a Google if Chris Camillo's allegations don't end up being accurate, right? That is an Amazon. That's a Meta. That's all the AI companies, all the semiconductor companies that ultimately matter when it comes to building out this AI revolution. So that was the undertone I got from him. Sam's been very careful to not say people are going to lose their jobs because he doesn't want to be seen as like the doomsday guy. But if he's saying we have to do a UBI, he's probably admitting there will be some job loss. So I guess over the coming years, we'll get a better understanding of that. Red Cat, that's up 8.5%. That's another drone company that's getting some love. A lot of the drone stocks got some love last week. And that is up 8.5%. S&P still flat. Not really making a move. Not really making a move in the midst of some of the volatility that we have. Do you think Google will respond to Chris Camillo's thesis? I don't think Chris Camillo is making that much noise to the point where Google will respond to it, unless that thread like goes really viral and people start asking a lot of questions. It is the first short thesis I've ever heard of with this particular claim. I don't know. Who knows? If it gets big enough, maybe Google puts out a response and says, we have never queried search results that are not part of Gemini or Google search itself. But I have not seen a short report like that before. Have you looked into OUST? I have not. I know it's getting some buzz on social media. Ouster down 7% right here. I really have not looked into it. I would have to take some time to go deeper, but I believe, if I'm not wrong, 3D advanced vision for robots, vehicles, infrastructure assets. I would imagine they're going to play a role in, or at least they're being perceived as playing a role in the robotics AI space. But I have not looked into this one. How much is it up year to date? This one's down 7% today. This stock year to date, wow, it's up 160%. All right, there's been gems all across the board. I'll look into it. Maybe it's worth a deep dive. So we'll take a look at it. It has to do with LiDAR. Okay, so then probably with self-driving, there's going to be some implications with this one as well. But it is up 160% year to date. Duolingo, that's up 10%. Again, I don't think Duolingo deserved to go to 307. I don't know if it's going back to 440 like it did last week, but it is up 10% on the day. And so that one's green. Yes, I've heard of Root. People like that one as well in regards to insurance. Dude, insurance stocks this year have been getting some more momentum. Lemonade, Root, Oscar, UNH. A lot of these guys have been starting to see some more momentum. UNH obviously is the clear one that everyone thinks is cheap. But we got to see if the big guys buying in is enough to get people excited. You know, Stanley Druckenmiller did not buy. I thought he might take a shot at it, but he's more of a growth investor. So he did not take a stab at UNH, but you have everyone else, Burry, Saudis, Buffett, Tepper, that really think there's some deep value here. Yeah, we looked at the HIMS CEO news selling another 130,000 shares. Cypher, that's up a little bit. Actually, a lot of bit. That's up 13%. I ran a lot of these Bitcoin AI miners or Bitcoin miners that turn into AI data center plays. I ran right there up 2%. They've kind of changed their entire business model. And the sad part about a CleanSpark is that you would think a CleanSpark would have embraced that, but they're still stuck on Bitcoin. Like CleanSpark is only doing Bitcoin mining. They're not doing AI data center work, even though they have the facilities to potentially transition into that. And they're not doing Bitcoin treasury stuff. So if you're just a pure play Bitcoin miner, like no one cares. No one cares anymore. The fact that CleanSpark was this price when Bitcoin was 30,000 and Bitcoin's now at 120 and CleanSpark's at this price is sad. Like this thesis did not play. Unless you got in at CleanSpark at $2. That's when Bitcoin was like at 15,000. But most people got into it around 10. Most people honestly got into it at around 16 to 20. That's when it was really hyped up. This was like March of last year. And shout out to Iran and Cypher. They were able to kind of transition. It's TerraWolf as well. They were able to transition the business from just being a Bitcoin miner to tapping into AI data centers. And that is really what's helped them. APL, dude, what's the headline on APLD? Why is this thing running 17% on the day? I know they got that CoreWeave deal a month and a half ago, and that was super exciting for them. APLD announces will break ground on $3 billion data center in North Dakota. A 280 megawatt center. The new project comes as demand for AI computing capacity continues to surge, with hyperscalers, enterprises, and research organizations seeking scalable, high-performance organization infrastructure, along with needing abundant energy, available land, and pro-business climate. Okay, so APLD, basically what we're discussing, has turned into a data center play. There you go. $3 billion AI data center in North Dakota, with initial capacity starting in 2026, reaching full capacity in 2027. If you are associated with data centers, your stock's likely getting a bit more of a bid. And take a look at this chart from Goldman Sachs this morning as well. Look at this. Data center construction soon to surpass general office construction. This is why, but like when people get, whatever reason they want to get bearish about, it's like, okay, you can be bearish on valuations, you can be bearish on the market, but you cannot deny there is a massive infrastructure build out around data centers, which in and of itself creates opportunities around the Vistras, the APLDs, the Cyphers, the Irens, the VSTs of the world. But on top of that, they're building these data centers for a reason. They're building these data centers because there's going to be GPUs in those data centers, bullish AMD and NVIDIA. And based on those GPUs, there should be some ROI for the companies that are buying all that compute, all those AI workloads, aka margin productivity. All of that is intertwined with each other. And that is why I think people are buying the dip at any moment they get a chance on, because they can't deny what's happening in front of them. The fact that data center construction is surpassing general office construction, like everyone needs an office, right? Or at least most companies have offices. Data center surpassing that is, to me, is insane. It's crazy. And I think that's why stocks like an APLD is getting momentum. It's an AI arms race, correct? And I hate being the guy to be like, oh, well, people are buying the dip because there's an AI arms race and therefore you can ignore a lot of the things that might not be that pretty in the macro. But like, that is what's happening. Like, it sounds toppy. I get it. It sounds aggressive. It sounds like super euphoric and stuff, but that is what's happening. People are ignoring some things that might not be the best in the market, like delinquencies on credit cards or PPI, because they're saying, well, data centers are getting built out and those data centers have a customer. Those customers are the companies that have the biggest balance sheets in the world. Those balance sheets are going to get an ROI from those data centers. Otherwise, they wouldn't be spending. Now, if they don't get an ROI, it all falls to shit, right? If Google comes out in 2028 and says, yeah, all that money we spent on data centers and chips, there's no need for it. We didn't really see any progress. Then, like, we're going to have a little bit of an epic collapse. But if you don't think that's going to happen, which I don't think it will, just based on all the research I think we've all been doing on AI, then there will be money to be made over the next 5 years based on that thesis alone. And people are likely not going to be selling their stocks because of PPI. Barring we don't get a recession, obviously, but if you can keep a decent macro, I think that's not the worst thing in the world. Tom says, I just sold my first call option on APLD. Thank you, Amit, for giving me the courage. Tom, let me know what strike you did. I would love to know how you did it. APLD, the premiums today must be paying like crazy. Also, let me know your average. I would love to know your average and what strike and what expiration you sold. Even if August 22nd, yeah, dude, the premiums today, they're up 400% across the board. Even a $20 call will get you about 10 cents a premium, 18, 29 cents. Today is definitely a good day to sell some calls on it. UNH, 4%. There you go. She's breaking out, folks. She's starting to break out a little bit. 315. If this hits 320, I think the street's going to be very excited. That was at 320 back in May when it recovered from 240. So it would kind of be another attempt at trying to break those levels. And you might have more people start buying in, which would be exciting. This is why China shouldn't be shut out of AI, because what if they can do something cheaper without a data center that's without so many of them? Yeah, and again, Elon's been sharing a lot of these charts about China's electricity, which continues to show how much they are aggressively going forth with energy. Take a look at this chart as well from Goldman Sachs. China is now the #1 country in the world with nuclear reactors under construction, probably to fuel the demand for energy for their data centers. India has 6, Egypt has 4, Turkey has 4, Russia has 4, Ukraine has 2, Iran has 1, China has 29. So energy demand is not stopping anytime soon. Guys, Chris will be on probably in a couple days. He also, his job, Chris is also unfortunately not coming to the Miami meetup. His job like switched his time. He already works overnight, but now his job like kind of switched his times again. And so he's like working more in the night, sleeping more in the day. And so we're going to try to get him on probably on Wednesday or Thursday, maybe even tomorrow. It just depends on when he's free. But yeah, his job is like being weird with the timings of it. He works in healthcare. He's a healthcare IT consultant, but he's the guy at like 1 a.m. If something breaks, he is the person that needs to fix it. And so they kind of elevated his role and they switched his time over the past couple of weeks. And so now he's like legit the guy. Then something did break the other day. And so he's not been sleeping too much. But yeah, hopefully we'll get him on the show in a couple days as well. Okay, got some quotes from Zelensky. Zelensky says it would be impossible to give up territory to Russia. Bloomberg is reporting that Zelensky had said that. See, again, if the meeting today consists of Zelensky not agreeing at all to anything in regards to giving up territory, that means this war continues. And it is going to be up to Trump and the European leaders to convince him that he should give up land. Now, granted, one may argue, well, Ukraine's a sovereign country. Why should anyone have to, like would the United States give up land? Like, no, right? So, like, Zelensky should be able to fight and continue to fight to not give up land. The problem is a lot of the money that he's getting is from Europe and the U.S. So, yeah, like, yes, the U.S. would never give up land because the U.S. has one of the best militaries in the world, and we would fight to keep our land. Ukraine does not have the same capabilities, and they haven't for the past couple of years. So if he wants to continue to fight, now here's the interesting thing. What happens if Trump legit says, all right, we're fully cutting you off? Because Trump said that a couple months ago. That's what caused their spat inside of the White House. He said, you don't have the cards. And then 3 weeks ago, Trump was at a dinner. I think I showed you guys this clip. And Trump said, we're going to send Ukraine some more stuff to defend themselves. I think Trump just realized the brutality of the amount of people that were dying and realized that there needs to be some defense. What if Zelensky is like unwilling to negotiate at all, and Trump just says, you know what? We are not sending you another penny anymore. And then what if the European leaders follow? Now, I think that would be very hard to imagine. Obviously, NATO at that point, even without the United States, might still back Ukraine. And then you get into a war between NATO and Russia, which I don't think anyone wants. But what if both sides say, all right, dude, if you're not negotiating, we're not giving you any more money? I mean, what does Zelensky do at that point? You can't keep fighting without the money. So that's why today is going to be a really important meeting. And it's going to be very crucial to see if there's any level of cooperation that we get. And then ultimately what that means for the war in and of itself. That's my prediction. International relations is all about being pragmatic. Yeah. And I think that's what the European leaders and the US want to get, some level of pragmatism. But who knows, dude? One of the worst things for the market could be if Zelensky is just completely unwilling to agree to any of the terms. Because then obviously this war continues. And that would not be the best thing. What also would not be the best thing is if Trump presses Ukraine, Zelensky in person on giving up territory. Like if you have a blow up again in the White House, that would not be the best look. But later today, we're going to see what ends up happening with that meeting. Palantir right here, 173. Hoodie is at 111 in the S&P, 643 S&P. Basically flat on the day. The EU is strongly against Russia, so this is not an option. I agree. I think if the US were to take away funding from Ukraine, the EU would just step up, and then it would be EU versus Russia, which is, not going to be pretty. So I don't know, dude. This is going to be this is going to be one of the most important things Trump could possibly get done in his presidency. I mean, this is going to be one of the major things to get done, and I think he knows it as well, and he really wants to get it done. But later today, we're going to see if we can get some meaningful progress on this. Update on Meta and Palo Alto. Let's get that right here, and then we'll keep going from there.
Today that Meta is planning to restructure its AI efforts for the fourth time in 6 months, expected to divide its new AI unit, Superintelligence Labs, into 4 different groups. This price will take you back to August 1st, about the lows of the month so far, although it's still up 30% for the year to date.
All right, just a few hours from results out of Palo Alto Networks. Shares flat on the year. Christina Partsinevelos is here. She's got more on what we can expect when we get the print tonight. Christina.
Well, it's Q4 and 2025 results after the close, and Wall Street is expecting earnings of, throughout the numbers, 88 cents per share on revenues of $2.5 billion. But really, that's a 14% increase year over year. Despite underwhelming cyber earnings this quarter from competitors like Checkpoint and Fortinet, investors remain pretty positioned long into Palo Alto, into the print. This is according to several Wall Street analysts. There's 3 key factors that are driving this more positive play for Palo compared to others. First, it's still viewed as what Bank of America said, the premier cybersecurity asset by institutional funds. Second, it's the only real platform play in the sector, again, according to analysts. Third, AI is seen as a tailwind for Palo Alto versus a headwind for the broader software space, which we've seen some major weakness as of late. The long-term...
Let me know if anyone's playing Palo Alto after the bell. This will be a big one. Let me know if you're loaded up on it at all, or if you're buying based on the discount after they bought CyberArk, which is why the stock is down about 20%.
Driver, though, is the $25 billion CyberArk acquisition, which was announced just in July. While the deal does bring some near-term dilution, it does mark Palo Alto's formal entry into the identity security market, a space increasingly viewed as an AI beneficiary with the rise of agents. Investors are betting both on cost and revenue synergies from the strategic combination, but more so in the long term. However, there are still some concerns. KeyBank downgraded the stock post-acquisition, citing 4 main issues: limited synergies between identity and network security, customer preference for independent identity vendors, lack of a replacement cycle catalyst right now, and then just execution risk on such a massive integration that was just announced in July. Bottom line, the other big issue is that we've seen big earnings per share day moves consistently fading across the tech space this year. And the stock is down, 9% since that CyberArk acquisition. So this earnings could serve as a clearing event that bulls are hoping for if management can articulate the synergies between both. But we have just seen across the board so many of these tech names really fade if they just happen to meet the bar or slightly, increase guidance. But it really, a lot of investors want this massive blowout with guidance to keep the stock going over the following days.
At what part of
No, CrowdStrike's earnings estimates were also lowered by the street this morning by one of the firms. I think it was Oppenheimer. So you do have a bit more of weakness in the overall cybersecurity sector, which is fair. Fortinet did not have the best earnings either. I don't know what to expect from Palo Alto. I think it's good they made the acquisition. I think we're seeing some more consolidation. I don't know if that means that demand for cybersecurity, at least in the short term, is as strong as the street's expecting it to be. Even though long term, I think demand's going to be fine because with AI, you need more cybersecurity. The 10-year, by the way, 4.339. So that is slightly up on the day. It was at 4.25 last week. But that is now green. BMNR, is that spiking a little bit? NVIDIA's 181. BMNR, it was down 7. Now it's down 3.5. Hoodie spiking too, up to 112.50. You are seeing a little bit of a green candle. SoFi just went green. Rocket Lab 46.40 just went green. ASTS trying to go to 50. Amazon 70 cents away from going green. Open Door is at 360. It got hit at 395, but that one's still holding up. And then NVIDIA trying to get back to 182. All right, so you got some green candles across the board, even though you also have some red in certain pockets. But S&P is rather flat. Here's an update on the Novo news that we got this week or this morning.
The GoodRx partnership, because you can see that is sending shares absolutely flying this morning. What does this mean for Novo? What does this mean for GoodRx?
I think it's seen, on the backs of this Wegovy approval last week that happened late on Friday. Novo has had a rough start to the year, and this is sort of the good news that they needed to get investors excited again about what the company is doing. It's been losing out a bit to Eli Lilly's drug Zepbound. And so what this really shows is that Novo's trying to get back into the market. They are making some strategic moves to one, get their drugs to more patients, two, sort of this hands. I'm thinking of it a little bit actually as like a 1-2 punch. We've seen the Trump administration wanting to lower drug prices, asking companies to lower their drug prices. And so sort of on the heels of that, we are seeing Novo come out and say, Ozempic, which is probably the most best known drug right now, we're going to lower the price for cash paying patients. At the same time, fighting off some of the competition, both from Eli Lilly and from the compounders that have been eating away at their sales.
It's still not very low. I just want to remind everybody, it's still at $500 a month. If you're on the maximum dose of 2 milligrams per injection, that's like $65 per milligram, and gold costs 10 cents per milligram.
Thank you.
So the compounders, I guess, are the better comparison, right? I'm seeing on my Instagram feed $119, $99. Now, these may be for smaller doses, right? And it's a compound, not the brand name drug. But can they really fight them off with, still the cost of like a nice Hyundai car lease?
Right. It's interesting because patients who are on Ozempic is Novo's diabetes drug. Wegovy is the obesity drug. And there isn't really as much of a cash pay market for diabetes drugs because if you have type 2 diabetes, your insurance, and you are on insurance, it's usually going to cover Ozempic or another diabetes treatment. So this move, Novo said, I think they said that there's like 98% coverage for Ozempic already. So there aren't that many patients who aren't able to get Ozempic, and $500 a month is still a bit expensive when you have insurance coverage for the drug. So they just, I think, are trying to expand availability as much as possible. So
this is either bullish for Hims in the fact that their compounded versions of these drugs are cheaper, or this is bearish in the fact that if now Novo has a cheaper drug that still isn't as cheap as Hims, but still is not seen as like a fake compounder version of it that is also covered by insurance, then that could create some more momentum for them. And that's why I think Hims is down 2.4 right here. Just the street trying to understand what exactly this means for more of a competitive dynamic with the compounders. Yes, as Trump said, it is the dude. What do you guys remember when Trump said it's the fat shot drug? Like, I could not believe this is why, to an extent, people relate to Trump, because he just, like, when you call Ozempic the fat shot drug, even though it's not only used for obesity, it makes it much more simple to understand. And again, going back to Trump's argument around getting drug prices to come down, you know, there you go. You have Novo cooperating to an extent by getting these drugs to come down a bit in terms of price. Rocket Lab, is that making a bit of a move? Yeah, Rocket Lab. Wow, what started that 5% move on Rocket Lab? That came out of nowhere. And that could also be why Novo is getting excited about lowering some of these prices to deal with the administration. Rocket Lab 46.50. There we go. That is green. Not sure why, but that is green. ASTS is also busting out a little bit. There you go. ASTS 49.91. The entire space sector, though, tends to be up today. Is Redwire up? Redwire is also up. That's up 1.6. All right, so you've got all of these space names getting a bid on the day. Are you selling CCs on Tesla? Yeah, I did sell the... I don't have it open anymore, but I sold the... Before earnings, I sold the 370. And then after earnings, I sold the 345. And now I don't have any anymore. I'm probably going to sell the 350. Where is it at right now? 330? Yeah, I probably would do 350 right here on Tesla. I mean, 350 is the high end of my range, where I think it's kind of within 280 to 350 is kind of what I'm thinking. So yeah, 350 is 345 to 350. I don't think is crazy for these strikes on Tesla, but I've done it on 370 and 345 so far. Again, my goal with Tesla is, look, I believe in the thesis. I know the stock's dead money. So to me, it's just whenever I get a chance to add, I want to add. And so when it fell to 302, I added, not a lot, I added 10 shares. But if we see dips in the low 300s, I think, all right, if you believe in it over the next 10 years, then that's what you buy. In fact, Steve, I showed him the video of Figure over the weekend. Figure put out another video because someone said, oh, can the robot do this when the table is lifted up 6 inches? And Brett, who's becoming an animal, he's just like quote tweeting and responding to these people. And he's like, hey, you want to see this? Anything else? And they posted another video of the robot doing as the table was higher. I showed Steve this last night, and I was like, Steve, there's no way you're going to let your covered calls get called away on Tesla. He has them at 260 for September. He did the math. He could roll them to 500 for December 2027 and still make money. Still get a credit, a net credit. And so I think he's going to roll them. I don't think because this is what Tesla's going to do at a much more elevated level because they have the manufacturing to be able to scale Optimus. And when they do this, I think the stock gets re-rated, even if it takes some time. So, yeah, I don't think he's going to let his shares get sold away at 260. He'll probably roll it to 500. And in 2 years, to be honest, I'm not expecting Tesla to be that high over 500. I mean, like Elon said, it's dead money in 2026. He said, don't expect anything till the second half of the year. Would I love for Tesla to be over 500? Yeah, but I'm being realistic about it. Like, they're not going to have the earnings growth until probably early 2027. And by then, the earnings growth needs to be, substantial enough to get them into that 500 level. Now, could it jump on hype? Sure. But I think it'll take a couple years. And if it does, then saving those shares, I think, would be a good idea. But Tesla is kind of been flat around that 330 level. Rocket Lab right here, 46.71. Optimus is behind, though, by their own admission. I agree. They admitted Optimus is not doing as well and that, people were leaving the Optimus team. However, I think a lot of this stuff happens all at once, right? It's super slow, and then eventually it just breaks out. And I think for Tesla, like if Figure wanted to manufacture 100,000 robots next year, they couldn't do it. There's just no way, even if they had the demand. Tesla, I think, could. They got to perfect the product, but they have the supply chain to do it. And that's what gets me excited about Tesla from an optimist perspective. It's like Elon knows how to manufacture. The question is, can they get the robot to actually be good? Hoodie 113, Palantir 174. You're seeing a lot of green candles across the board now. S&P again trying to go green. It's barely red. But that's what makes me a bit more bullish on Tesla. Are you selling puts? I'm not selling puts. You know, I haven't been selling a lot of puts this year. I've been selling more covered calls. I've been buying more shares and selling covered calls versus selling puts. But this has been a great market to sell puts on. I mean, actually that's a lie. I sold very aggressive puts on. I made like almost 25 grand on selling puts on Hoodie when it was 55. It was kind of degen, but going into the earnings in Q1 before they had their first $1 billion quarter, I sold $65 puts. So I sold in the money puts, expecting Robinhood to get above 65. And it did. And then I closed those puts. And I think that trade alone was 15 grand. And another trade was like another 10 grand. But ever since those puts on Hoodie, and those were not really traditional puts. They were in the money puts. So they weren't really conservative safe puts. I sold some puts on Archer at $8 a couple months ago. I think I made like 1,500 on that. But ever since April, I've not been selling puts. I've been buying the dip and just selling calls as a way to protect against some of the downside. But puts have been doing well. I may get into Zeta. I've looked into Zeta a little bit. I don't know enough about it yet to get excited about it. It has done well. They had a really good earnings. And the stock year to date is now up 4% from the lows. It's up a lot more. Yeah, I just got to go deeper into it. I have not fully understood it. I want to, I kind of want to do something going into 2026 where it's like if I have 100 grand in 2026 of new stocks that I want to buy. Okay, let me ask you guys a question. In 2026, let's say we have a great year. Let's say it's a great year. Everyone ends up being, pretty green on their portfolios towards the end of the year. And you had 100 grand to allocate. Would you solidify that 100 grand into let's call it 3 positions, 30 grand each? Or would you do 20 stocks, 5,000 each? And the reason I'm asking is because I am already in the former. I am already heavily solidified and consolidated between Robinhood, NVIDIA, Palantir, and Grab. Now, Grab's been the loser, but you got 3 out of 4 that have been winners. Hopefully, Grab turns out to be at least somewhat of a winner towards the end of the year. And that has done wonders for the portfolio. And if I had taken that Grab money and put it into NVIDIA, Palantir, or Hood, it would have been even better. But I'm kind of thinking 2026, I want to take 100 grand and put 5,000 in 20 stocks. Even if it's just for fun, bro. Just in some respect, it's more hedging against volatility of 2026. And because look, here's my thing, bro. The reason I've done well over the past 2 years, realistically, is Hood and Palantir. Let's just be honest. Last year was Hood and Palantir. This year it's Hood and Palantir, and then NVIDIA really supercharged it. But my performance over the past couple of years, last year was 275%. This year is right now 110%, has been because of 2 to 3 stocks. I don't know if I can count on that into 2026, dude. And I've been starting to think of portfolio construction. I'm very curious what people are thinking. Can I count on 3 or 4 names carrying my portfolio for a 3rd year in a row? I don't know if I can. I feel like that's asking for a lot. Can I really count on Hood and Palantir doing another Hood or Palantir type of move in 2026? And so I'm not going to sell any of it. So technically I am counting on them to do well, but going deeper into them versus buying a little bit of Shopify, buying a little bit of Coinbase, buying a little bit of, United Airlines, buying a little bit of Lyft, Uber, TFC, regional banks, maybe some Duolingo, some Disney, just getting a little bit more of a portfolio that is not as reliant on a couple names. It's one of the things I'm thinking about. Why not both? Well, that would be both, right? So if I buy, let's say it's not 20 stocks, let's say it's 10 stocks at 10,000 each. If I'm not selling Hood, NVIDIA, and Palantir, then it's basically both. It's just adding a lot of new diversification to the portfolio. But it's also not really setting yourself up to get like another massive year of gains, because again, one of the ways you get real gains is you kind of have to solidify to an extent. A lot of you have real gains because of AMD and because of SoFi and because of Hood and Palantir and Rocket Lab and going in. Even Google, even though Google hasn't made a massive move until the past couple of weeks, a lot of you guys have solidified a decent chunk of the portfolio into Google. And so finally, when Google went from 150 to 200, that's your portfolio winner. That makes the portfolio green for the year and holds it to be green. And you know it's Google, so it's a company you don't have to expect to go back to 150, hopefully. So I don't know. It's definitely something to think about going into next year. Nebius, right? Yeah. Nate, shout out to Nate in the chat. I think he consolidated into Hims, Nebius, and Palantir. That's his portfolio. And it's been great for him all year. So I don't know. Let's do a poll right there. What are you thinking? 2026, diversify or solidify? Like realistically, what I want to do is consolidate. What I want to do is find 2 stocks and put 50,000. And I'm just using this 100,000 as an example. That's not the actual number. I'm just saying, you like as a metaphor. If you had 100 grand, I'm the type of guy that picks 2 stocks and goes 50K in each, or 1 stock and go the whole 100K. That's what I've done for the past couple of years. But I just feel like I don't know if that can easily work unless you really find a winner, like a new stock that's a genuine winner, or your winners keep winning. Like if I buy more Hood and Palantir in 2026, I've got to hope they keep winning. Or at least not lose to be able to keep up some of the gains. Consolidation is how you make money. I agree. But also, right, I know it's cliche at some point to protect the money, right? You got to diversify a little bit. You got to have some parts of the port that can keep it elevated. Because I feel like I already am so heavily consolidated that it's not like I'm not consolidating. It's just that I'm getting a little bit more exposure. 54% of you say diversify. I don't think it's crazy. Also, there's other stocks I want to own, dude. Like I would love to own Shopify. I would love to own. I do have decent amount of Rocket Lab. So I will say, yeah, Rocket Lab has been one of the winners. So I mean, I would like to own, I don't know, what's the stock I've been wanting to, a Nubank. Like this is a name that I think even selling calls against this is not crazy as a, you know, if you have 500 shares of this in the portfolio. I wouldn't mind owning some Walmart. I'm not expecting Walmart to grow like crazy, but I don't mind having some Walmart, some United Airlines, like having some of these plays in the portfolio that you just don't have to worry about being super volatile. I use United every time I go on a trip. I feel like I should have owned the stock for years. It went from freaking 30 to 100 last year. Like there are other names that I feel like holding would not be crazy, even if it's not the big winners. Arista, yeah, I want to own ANET. I want to be more like, I want to own more semiconductor. I want to do some deep diving into ASML and say, hey, is there some alpha there, right? Now, obviously, I would like to also just buy more NVIDIA, but I don't think it's crazy to diversify into some of these other names in case NVIDIA just doesn't have a massive performance in 2026, which would be like, dude, if NVIDIA stays flat all of 2026, are we like, okay, it stays flat at a $4.5 trillion market cap. Boo-hoo. It's like, yeah, would I love it to go to 6 trillion? Sure. But what if the street's just not willing to give it that premium? And so these are questions I think that are like very important to think about going into 2026. Would you sell Hood to buy Grab? No, I would not sell Hood or Palantir to buy Grab. Again, I really like Grab. I wouldn't give up Hood or Palantir for it. I think Grab has its breakout. And I think the upside on Grab theoretically could be higher than a Hood right here because Hood is already 3x from the lows. But I wouldn't sell Hood, dude. I just see too many catalysts. Too many catalysts going into the end of the year. That should give it some momentum. Snap's at 7.15. Okay, so Snap I think will recover above $8 because it tends to always do that. But I guess the earnings were just that disgusting to keep this thing into the 7s. Now, if it falls below 7, that's when you got a real issue. Usually it tends to at least hold above 7. So it hasn't gone below 7 yet, but could see that playing out. Can't you buy some S&P 500? The only reason I don't want to buy the S&P is because I still think if you can pick the right individual stocks, you should be able to outperform the S&P 500. I mean, Robinhood's not in the S&P. If I had picked the S&P over Robinhood, like it just like dramatically would have underperformed against what you could have had in your portfolio. So I still think the S&P itself is not as strong as a bucket of individual names, but you got to be good at picking those individual names, right? And like, it's not easy to pick those names. ASTS right here is at 50. It's getting some green. HIMS at 45, and then MSTR at 361 as well. Now, granted, what if we find a diamond in the rough, a hay in the needle stack, and we just, we consolidate into that next year? That is the dream scenario. You find a real winner before it's a winner, consolidate, and then it carries your portfolio. It's just really hard to do that. Like, it's just really freaking hard to do that. And now, granted, retail has done that this year many times. Retail's done that with Iren. Retail's done that with Rock Lab, Palantir Hood, obviously. Oscar, Lemonade. Retail's had a lot of these names this year. APLD, Navitas, AMD at 75. I mean, retail's done this in a bunch of different names. Question is, in 2026, can that get replicated? It was a hay in the needle stack. It's a really popular common phrase if you haven't heard it before. It means like finding something, like finding the diamond in the rough, hay in the needle stack. So for those that haven't heard it, I'm happy to educate everybody on the term today. All right, here's Yardeni. Let's get his take on what's going to happen at Jackson Hole.
It's all going to be up to Jerome Powell. He will speak at 10 a.m. on Friday, and the question is, will he be a dove, a hawk, or an owl? An owl just kind of sits there and watches, and I think he's going to be an owl. I think he's going to say the Fed is still data dependent. There's still a couple of very important numbers that'll come out before the meeting on the FOMC meeting on September 16th, 17th, namely the personal consumption expense.
I guess we have a lot of new subscribers in these chats, but it is not needle in a haystack. I don't know like where you heard that propaganda from, but for the OGs that are part of my channel, it's actually hay in the needle stack. So I know we have a lot of new people here. Welcome to the channel, but you got to make sure you get the phrasing right, because if you don't, you sound kind of ignorant. So just please remember, it's hay in the needle stack. Thank you for your attention to this matter.
Expenditure deflator inflation rate will probably be a little bit on the hot side at the end of this month. And then before the meeting, we'll have a CPI number, which also could be on the hot side. And then the big number will be the payroll employment number for August. And I think it's going to be something around 100,000, which I think the market would view as indicative of an improving economy. It was very weak, as you know, in May and June, but then it actually recovered to 73,000. That doesn't seem like much, but it's pretty good compared to what we saw in May and June.
Okay.
And I think August could be up as well.
All right. So, I mean, there's still a lot of data points left, is what you're basically saying. You think Jay Powell is going to be an owl. So with that in mind, your pick for us today is the SPY. And I thought this was pretty interesting. It's obviously very dominated by some of those Mag 7 names. Why is this a great time to invest in the S&P 500?
Well, there's the Magnificent Seven in the S&P 500, and then there's the S&P 493. And maybe it's time for some of them to be a little bit more magnificent. I think the market is broadening out. And if that's the case, I think it's broadening out to the 493. It may also be broadening out to the SMID caps, the S&P 400 and 600. But look, with regards to the stock market, I tend to be in the same camp as people like Warren Buffett and Professor Siegel. I think you hold them for the long run. You want to make sure that you get the dividends and reinvest the dividends. And I've got the S&P 500 getting to 10,000 by the end of the decade, which I think we'll look back and say that it was the roaring 2020s, kind of similar to the roaring 1920s.
So Yardeni continues to believe this decade is going to be positive for equities, which I agree with as well. And again, every argument Yardeni has been putting out over the past couple of years about this sort of roaring 20s thesis has been rooted in AI and earnings growth as the tailwind. And, you either believe in that or not, but that seems to be the macro reason why a lot of people tend to be more bullish about it. I can see there's a fiery debate around phrasing in the chat. I mean, I don't know what to tell you guys. It's hay in the needle stack, but it is what it is. It is what it is. We came up with that term a year and a half ago. That is the correct term. I know you guys have been fed lies by the media around needle in the haystack, but it's okay. That is okay. 56% of you said diversify versus solidify. Going into the end of the year, we're going to do a lot of content on portfolio construction in 2026. And I'm going to try to get a lot of people on the channel as well to help everyone think it through, because I think if we end up getting some good gains by the end of the year, hopefully, then 2026 has got to be a year where we really double down on how do we protect it. Because I don't know, dude, 2026 is a midterm year, tend to get a bit of a bad year. I don't think we have to have a bad year. I think AI tailwind is really strong, but like if we get 10% more on the S&P and that gets to 6,800, dude, that's 3 years back to back of 20%. Do we get 4 years of that? Do we even get 15% on the fourth year? And if you do you double down on some names? Do you not double down on some of those names? Do you trust in your winners? See, like I'm talking about diversifying in 2026, and then I see a picture by Robinhood, and it makes me want to just buy more of Robinhood. There you go. We're hosting a Reddit Ask Me Anything on our Reddit Robinhood app with our CEO and co-founder Vlad and our crypto GM Johan. Join us on our subreddit with your questions about crypto. We'll be answering as many as we can. See, like do I buy more Shopify and like CoreWeave, or do I just buy more Robinhood shares? Like this makes me want to buy more Robinhood. So in all seriousness, I do think 2026, we're going to have to think like, how do we set up the portfolios? Because the last thing I would want to see is there's some weakness in 2026 and everyone's massive gains start falling down the toilet. And so I do think we're going to have to really think November and December how we want to play 2026. But there you go. So again, seeing this stuff from Hood I just love this stuff, bro. I just love them engaging with their community. There's an like this is basically like an investor Q&A without like being a formal investor call, and they're going to answer as many questions as they can, and it's going to be rooted in crypto. So when you got the CEO and the co-founder doing stuff like this, it's definitely exciting to see that the company continues to double down on their engagement with retail and with their users at the end of the day as well. Do you think buying Hood right now is good? Yeah, dude, I've been buying Hood at these levels. I have not been shy of buying Hood at 107, 110, 115. So, I mean, yeah, but again, if you're entering into the position here, you've got to be buying it knowing that you're going to have to DCA if it tanks. Like if it goes down to 95, I would be annoyed. I'm sure everyone would be annoyed, but you can't be upset given how much it's up this year. You know, right now, Robinhood's maintaining a multiple. I think that multiple should expand based on the growth, but I can't guarantee the street's going to keep giving them that multiple for whatever macro reason that happens. But I know that Vlad is working his ass off to make sure that multiple expands. And that's why it gives you a lot of like just safety knowing you're investing in a CEO like that who's just not stopping. If we get below 105, I'll be more excited to buy the dip, but I don't know if we'll get there. 107 is the lowest we got to last week. This is why you have to be in it for the long run. Yeah, I agree. I mean, I obviously, if you're in a name heavy, you got to have a long-term thesis on that name. It's just a question of like, how much of the volatility are you ready to deal with? UNH right there at 315 within that name itself. And that's also the good thing about being early. Like if your Palantir average is like 30, $40, unless Citron Research is right, even if Palantir goes down next year, you're able to have a margin of safety that's strong. And so the beauty of just getting really early into some of these names is that you're able to hold on even when it gets weak. You're able to potentially double down and buy the dip. And that allows you to solidify and really build a big position, which is what retail did during the tariff drama. And that is why I think retail is in a prime position. I just want to make sure 2026, there's a form of protecting all of that while still having upside alpha. Like as a portfolio gets bigger, the ability to double or go up 80% is not as easy. That's why if you're a fund manager and you get a 20% year, if you're managing a couple $1 billion, dude, 20% on a couple billion, your clients are very happy because the ability to manage that much money and still get 20%, it's harder than having a $50,000 portfolio and turning it into 100,000. So I think as all of us have portfolios that get bigger, we need to think 2026. How do we continue to produce alpha, but also protect if you do have a little bit of weakness or a lot of bit of weakness? And we have to see going into next year. Thoughts on paying off a 9% car debt this year rather than investing? The car will be fully paid off by February 2026. I would pay off the car debt. At 9%, that is definitely a bit more aggressive than some traditional APRs. So I would pay it off, dude. Like the only time I'm in favor of investing versus paying off debt is when the cost of capital on the debt is significantly cheaper than the ability for you to get alpha in the markets. So obviously, if you have a mortgage rate that's at 2.5%, 3%, instead of paying off your house, if you have such a cheap rate, you should take some of that extra disposable income and likely put it into the markets, especially because the markets potentially could outperform your house. If you got a 9% car note, that's going to be paid off by February 2026. So you're close to paying it off. You're 6 months away. I mean, just the mental stability of and the mental peace of getting rid of that, and then the financial flexibility of not having to pay 9% on top of your principal. Same thing with credit cards, right? Charging 25 to 30% APRs. That I think is better than investing. Especially if you can pay it off soon. If it's going to be paid off by February 2026, if you can get that paid off by like November 2025, I think mentally you can deal with it. Dude, I'm doing that with my student loans. I have $4,500 in student loans, and I think the rate is like 5.2% or something on the interest. I'm just paying it off next week. I'm just getting rid of it. I didn't pay it for the past 2 months because they changed my service provider, so I literally was not able to. I was usually making $1,000 payment a month, but I couldn't do it because they switched the providers. So the switch just got finished last week. So I'm like, you know what, dude? Like, I don't even want to deal with this $1,000 a month payment because like theoretically, if I pay $1,000 in April or in August, I can take the other $3,000 and I can go buy some stocks. And then I can pay another $1,000 in September and October and November. But I'm also just like, dude, I just want to get rid of it. Like mentally, it's not like 45,000, it's 4,500, right? I want to get rid of it. I don't want to worry about $1,000 payment over the next couple months. And realistically, with that extra $3,000, I'm not going to be able to, make such a big move in the market that would justify paying that 5.2% on the interest. Now, my Tesla that has a 0% APR, $500 monthly payment, I'm not paying off I think I owe like $22,000 on it. I'm not paying off that $22,000 anytime soon because I can take $20,000 and probably do a lot more with it in the market versus give it to Tesla right now when I'm not even being charged interest because of 0%. So that to me makes more sense to not pay off the Tesla. But if you got 9% on a car or 30% on a credit card, I would just get rid of it. Yeah, it was, dude, the day there was the day in June, I thought someone paid off my student loans because I logged in to make the payment and they were like, you have no outstanding payments. And I'm like, who paid off my student loans? And realistically, they just transferred it to a different provider. So yeah, I still have to pay it. But I'm just going to get rid of it at this point. Tortoise, thank you for the $5 super chat. Amit, I bought 22,000 shares of BMNR average at 55.60. What are your thoughts? I think if you bought 20,000 shares of BMNR at 55, which are up right now, 56, then you probably are bullish Ethereum. I personally, if I were you, this is just what I would do. But if I've got 20,000 shares of a position, at least half of them I'd be writing covered calls on. So I would be selling 100 contracts of covered calls probably weekly, and I would do a 0.2 delta. I'd do 65. 65 today is paying you $1.05. You could do 100 contracts. That's $10,000 this week. I mean, your average is 55. You're betting it doesn't get to 65 by Friday. If it does, you can roll it. If not, you make 10 grand in a week. If you were to do that with all 200 of your shares, you would make 20 grand in a week. If you get to do that 4 weeks in a row, that's 80 grand a month. I mean, again, these numbers sound crazy, but it's because BMNR premiums are wild. And also because the downside is what if BMNR goes to 70 tomorrow, right? Because Ethereum spikes up, right? So you're taking a risk with selling the call. But the point is the premiums are great. So yeah, I don't hate the BMNR consolidation you've done, but I would hedge a little bit with covered calls and generate some premium off it. And obviously you've got to be bullish that Ethereum is going to make a move to be having 20,000 shares in it. And that's another strategy for 2026. What if you consolidate into a position and then sell calls against it instead of diversifying? Now, the way that would work in 2026 is it can't be a position that's at all-time highs, because if you buy stock at all-time highs and then sell calls against it, you might be good for a couple weeks, but then inevitably when there's a drawdown, the covered call premiums are not going to make up for the fact that your stock is down. So consolidating into a stock that hasn't run up yet and has good premiums, and you have a margin of safety to the downside, that is like a dream scenario, but finding those stocks are just not that easy. But these are the strategies I want to explore going into 2026 to see what we can do with our portfolios. UNH right there is up 3%. Open Door losing a lot of momentum. It was at almost $4. Now it is at 342. So it was up 18%. Now it's up 7.5%, but still holding that $3 range. All right, folks. I think that's it. I think we are done for the day. I don't know when that Trump-Zelensky thing is going to happen, but I will try to cover it on the market close whenever it does happen. Some reports are saying 12 p.m. It's probably going to be like 1:30. They never start on time. So we'll cover it on the market close. We'll see what they've got going on. And this will be a very, very important meeting. I hope it doesn't have a blow up like it did 5 months ago. We'll see if Zelensky is willing to cooperate at all, if the European leaders are willing to cooperate. So this will be a big one today, and hopefully we're going to get some positive progress on it later towards the end of the day. Diego, thanks for the $5 super chat. Do you think you should buy back calls you sold that are underwater and then start selling them again out of the money? That's essentially rolling. You're basically saying rolling. So yes, if your calls are underwater, you should roll them. You might have to roll them to get a better premium, so you might have to roll them further out. Now, if you're talking about buying back the call right now so you can sell weeklies against them, you can do that, but you're just going to take a big loss when you buy them back. So unless you're confident you can recoup the premiums, I would just roll it out a month, a couple months, and just wait for the stock to marinate. But essentially what you're describing is closing one contract, opening another, and that would be rolling at that point. All right, word of the day. What do we got? Remora. I think I said it wrong because that O is probably not going to sound like an O, but this is my beef with the English language. Why is there an O if it's not going to sound like an O? Watch this not sound like an O. This is the problem with English. Remora.
Remora.
See, you cannot tell me that I'm crazy. You cannot tell me that who looks at this and says remora? Like, no one can say they looked at this without the pronunciation thing right there and thinks remora looks like remora. I refuse to believe that anyone meaningfully would get an ER sound off the O. I just don't think that's true. An obstacle, hindrance, or obstruction. The bureaucracy's love for paperwork is an eternal remora to efficiency. Legal disputes added a remora that pushed the merger timeline back. Obstacle, hindrance, or obstruction is a remora. There you go. It's a noun. Yeah, dude. Yesterday was so funny. Steve and I were going on a rant about college, and we were talking about all the useless shit in college. And then Steve at one point was like, why do we even need to know what a noun or a pronoun or a verb is? And I was like, whoa, okay, hold on, Steve. We probably need to know what a noun and a verb is. But it was so funny. We were just like, why do we need chemistry? Why do we need this? Steve's like, why do we need to know what a verb is? I was like, no, I think we need to know what a verb is. Probably need to know what an adjective is. But yeah, we were talking about the issues with college. So, all right, folks, that's it. I'll be back on the market close. We got Palo Alto earnings. We'll see what happens with Trump, Zelensky, and the EU, and we will keep going from there. Miami meetup this weekend. All the spots are pretty much confirmed. If you really want a spot, just DM me on X. So if you really want to be there, please DM me on X and I will get your name on the sheet. But we pretty much have all spots confirmed. Very excited for it. I will be flying out on Wednesday night after the market close. And so I will be there on Thursday. I will be there from Thursday to Sunday. And I'm looking forward to meeting everyone at the meetup. All right, folks. Thank you, everybody. I'll see you guys on the market close in a few hours. Bye, everybody. Have a good one.